and welcome to today's How's It Going sessions brought to you jointly by ORIMS and Sedgwick with the support of RIMS Canada. I'm Debbie Carpenter, your ORIMS Professional Development Director for the 2020-2021 term. And so far, what a year it's been. As risk professionals, there are a number of shared challenges that impact our work, and we'll look at three of them today. Macroeconomics and the insurance marketplace, our service environment, and navigating this unfamiliar new normal. Before we delve into these sessions, RIMS Ontario Chapter President Tanya Dietrich has a few words. Tanya?
Thank you, Debbie, and good day, everyone. We are so pleased that you're joining us today for this informative event. As much as we would have liked to have been speaking to you in person, ORIMS is absolutely honored to host this virtual event and bring it to a wider audience right across Canada. We have pre-recorded the sessions to ensure that there are no technical difficulties. However, our speakers have agreed to participate in a live Q&A after each of their sessions. We ask that you not record the event, as we will provide a copy on our website. I would like to acknowledge our partners for this event, Sedgwick and RIMS Canada. Thank you for helping us put this together. We chose this date in recognition that exactly 1 year from now, we hope to all be together again at the rescheduled RIMS Canada conference in Ottawa. On that note, I present to you our RCC Chair, Jeanette Demers.
Thank you, Tanya. Yes, sadly, no Canadian RIMS conference in person this year, but we do cross our fingers, like Tanya said, that this is just temporary. So first off, I welcome you from across Canada to today's mini conference, bringing you a different perspective about COVID and its impacts on our industry. I want to thank our guest speakers for their time, and I especially want to thank the Ontario chapter and Sedgwick for this initiative in bringing our community together. Special thanks go to Debbie Carpenter, Tanya Dietrich, Tina Gardner, and Gary Gardner for the organization. And on this note, I'm brief. Enjoy your sessions. Gary, I invite you now to say a few words to our audience.
Thank you very much, Jeanette. And on behalf of Sedgwick Canada, thank you very much for this opportunity. And thank you all for being here. I would much rather be seeing you face to face in Ottawa, so let's hope next year we get that opportunity. Today, we have a number of terrific sessions. We hope you find them of value. And as RIMS Canada has done in the past, a local charity was chosen in Ottawa. And I'm happy to announce, as we do today, nowadays, I don't have a check to hand to you, but I can tell you a digital donation has been made to the Ottawa Mission Foundation. This group has been providing services to the Ottawa community for well over 100 years. I've had a chance to get to know them over the last couple of weeks. It's truly a remarkable organization and a great choice. So with that, happy Thanksgiving. Please stay safe, and I'm going to turn it over to Dan.
Thank you, Gary. Yes, the Ottawa Mission certainly does a lot of good work in our community. Our chapter has been supporting them for a number of years. They've been deeply impacted by COVID-19, and the donation will be greatly appreciated by many in the community. Thank you very much. For the audience, we invite you to stay at the end for the closing remarks. We'll have a little surprise for you. And over to Debbie.
And without further ado, let's get into our first session titled, How Are They Doing? A peek into the insurance market in 2021 and beyond. Our panel consists of Lynn Oldfield, President and CEO of AIG Canada, Sarah Robson, President and CEO of Marsh Canada, and Heather Legg, Chief Agent for Validus Reinsurance Limited Canadian Branch. Our moderator is Catherine E. Dowdle, Director of Risk and Insurance at ACON.
Welcome to RIMS Canada virtual session called How Are They Doing? A peek into the insurance market in 2021 and beyond. My name is Catherine Dowdle, Director, Insurance and Loss Control, ACON Group Inc., based out of Toronto, but like most of you who have been working from home for the last number of months, I am now based out of my guest bedroom. I will be your moderator for today's session, and I was honored to be asked to work with such an esteemed panel of insurance industry leaders. Speaking for myself, this past year has most definitely been a challenging one, not only because of the pandemic, but also because the current insurance marketplace is in flux. I will leave it up to our speakers to put a name to what we are experiencing. Our speakers will look into their crystal balls to help us navigate these very interesting times and to provide us with their insights as to what we may expect in the next year and beyond. All of you would have received the bios for our speakers, and rather than read those to you, we thought we would share some personal and interesting facts about them. Our first speaker is Sarah Robson, President and CEO of Marsh, Canada. Sarah is a Queen's grad, and during her 4th year, she was trying to figure out what path to follow with respect to a career. What to do, go to law school or do an MBA. But she decided maybe it would be best to get some business experience. She had a day full of interviews with Chubb Insurance, and they asked her to meet with one of their executives. And for any of you who have been in the business as long as I have, you will recognize the name Udo Nixdorf. He led their executive protection and financial institutions department in Canada and was regarded as Canada's statesman for D&O insurance. So that interview went very well. And the next day they offered Sarah a position as an underwriter in the executive protection department, underwriting financial lines. And as they say, the rest is history. Sarah did write her LSATs, but never gave another thought to law or an MBA degree. She continues to be excited every day about her career choice. Our second speaker is Heather Legg, Chief Agent of Validus Re Canada. Heather started her career at the ripe old age of 7. Yes, I said 7. Taking calls from farmers about their cows getting loose. You see, her dad was the general manager for a small farm mutual, and their house phone number was the after-hours claims hotline. Our final speaker is Lynn Oldfield, President and CEO of AIG Canada. Lynn joined the insurance industry as a Wilfrid Laurier University co-op student in the 2nd year of the program. Little did she know at the time the opportunities that this industry would create. She has had the pleasure of world travel, attending glamorous events at RIMS conferences, and meeting many famous people. Warren Buffett was a career highlight. Lynn has been paying it forward by hiring Wilfrid Laurier co-op students since she joined AIG in 1991. I would now turn it over to Sarah to begin our presentation.
Thank you, Catherine. It's great to connect virtually with so many members of the Canadian risk management community. I'm sad that we were not able to come together in Ottawa in September, but I'm looking forward to seeing you all 1 year from now and hopefully sooner. I hope all of you and your loved ones are staying safe and healthy during these unprecedented times. 2020 has been quite a year, and as we look forward to 2021, it appears that many of the factors we are facing today will continue well into next year. So I want to start by talking a little bit about where we are today. In the second quarter of 2020, global commercial insurance prices rose by 19%. This marked the 11th consecutive quarter of price increases tracked by Marsh's Global Insurance Market Index. Overall, underwriters continue to push for higher levels of pricing increases due to the combined effects of social inflation pressures, persistently low yields, and a number of large underwriting losses, including from COVID-19. While capital remains adequate in most lines, insurers' risk appetite is reduced as they are increasingly cautious in an uncertain environment. When we look at specific coverage lines on a global basis, we see property insurance pricing increased by 19% globally, casualty pricing increased by 7%, and financial and professional liability rose by 37%. In Canada, we are experiencing many of the same trends and conditions that countries around the world are facing to varying degrees. During the second quarter of 2020, underwriting discipline has continued to drive premium increases. We are seeing increases in the range of 20 to 25% on average for property placements and approaching 20% for liability placements. We are seeing higher rate increases in Canada compared to the global averages, primarily due to the previous low sustained premium rates and high levels of insurer competition. Due to pressure from shareholders and reinsurers, insurers continue to restrict the level of capital that they provide and reduce volatility by managing their overall exposure to individual clients, market segments, and geographies in order to reduce their own volatility. Property markets are beginning to move away from writing accounts on a total insured or TIV basis. This is specifically relevant for clients who have been purchasing policy limits in excess of 150 million. So if that is the current state of the insurance market, what lies ahead? The remainder of 2020 and 2021 presents several potential headwinds that could accelerate property and casualty price increases. There's the continued uncertainty around known business interruption or BI losses. Insurers are closely monitoring ongoing regulatory and legal proceedings in the UK, as well as other jurisdictions. In May, the Financial Conduct Authority in the UK, or otherwise known as the FCA, announced that it would commence court proceedings to test how certain business interruption insurance policies respond to claims arising from COVID-19. The purpose of the court proceedings was to clarify how certain business interruption policies and wordings should be interpreted and whether they cover losses arising from the COVID-19 pandemic. We learned the court's decision last month. It found in favor of the arguments advanced for policyholders by the FCA on the majority of the key issues under consideration. Appeals will follow in due course, with further implications for in-scope claims. And the English High Court judgment, it should be remembered, applies only to policies governed by English law. That said, the court's judgment may very well influence insurers as well as local courts in other jurisdictions. There's also potential for COVID-19 linked employers and public liability claims at a time when casualty insurers are already concerned about the adequacy of non-COVID-19 claims reserves. The second is the impact of catastrophe losses, including the recent wildfires and the 2020 Atlantic hurricane season, which officially ends in November. Extreme weather conditions have fueled the growth of numerous forest fires in the western United States, as well as the ignition and spread of several new fires. Much of California and the Pacific Northwest remain under red flag warnings due to high temperatures and windy conditions. The statistics may be deceiving, as the US has experienced only 82% of normal acreage burned this year. In a typical year, nearly half of the national annual acreage burned is driven by wildland fires in Alaska. This year, however, was very quiet in terms of fire activity in Alaska, with the majority of activity concentrated in the western US. On the hurricane front, we expected a busy season in 2020, and this has proven to be true. So far this year, we're setting records with 23 named storms, 8 hurricanes, and 2 major hurricanes. We've also seen the earliest S-named storm since the practice of naming storms began in 1950. That was Sally. Since then, we've had Teddy, and we've also had tropical storms Vicky, Wilfred, Alpha, and Beta. The impact is significant loss numbers coming into the industry. These are currently developing, but many industry sources are estimating the losses to date this year are around $25 billion US. An added complication this year is the challenge of preparing and responding to a storm in the midst of the COVID-19 pandemic. We expect that the current low interest rate environment will also continue into 2021, which will not help insurers' profitability. Rate increases are not yet at the level needed to support the current interest rate environment. Another potential headwind is the P&C reinsurance treaty renewal season in January 2021. This is the time when many global insurers renew their treaty or portfolio reinsurance. Pricing in the direct market has increased quarter over quarter through 2020, despite many P&C treaties renewing at modest single-digit rate increases in January. Some insurers that arranged their main treaty renewal earlier in the year have reported double-digit increases for both P&C treaties. Insurer results for the first half of 2020 vary, but many insurers are reporting combined ratios, that is the ratio of incurred claims and expenses, including reinsurance treaty costs, to earned premiums in excess of 100%. We therefore anticipate that insurers will immediately pass on increased reinsurance costs to direct policyholders as they seek to achieve profitable underwriting results. Heather is going to speak in greater detail about the reinsurance market. The other thing to consider is the Lloyd's of London marketplace. Lloyd's is a real factor for us in Canada, and it is facing its own challenges right now with the impact of its profitability review of the bottom 10% of its syndicates and the dynamics of how it is treating growth within other syndicates. So what does this all mean for you? To successfully navigate a changing insurance marketplace like the one we are facing, it is important for organizations and their risk managers to be prepared. We recommend our clients focus on a few key strategies. Start the process early. It takes significantly longer to complete the marketing of any risk than it has in the last 10 years. Take time to identify and understand your risk appetite. Increasing retentions, reducing limits, and redefining cover are options that will provide robust rationale for underwriters to reduce their pricing. We recommend being proactive and controlling the range of options based on your risk appetite and tolerance, rather than waiting for insurers to impose changes. Prepare a high-quality underwriting submission and presentation. Focus on up-to-date risk information, but also on industry trends and risk differentiation. Understand your claims and articulate the lessons learned. Reflect on your response to large losses and changes in process to mitigate future claims. Ensure that claims management protocols are established to convey oversight and control of claims. Focus on risk management. Spend time on insurer engagement to articulate risk quality and provide up-to-date information on achievements as well as future plans. Have a thorough market engagement plan. Include potential use of our international hubs in order to generate capacity and create competition. Involve the C-suite. Engage with insurers' senior leadership and also involve your own senior management in order to articulate the board-level approach to risk management and enhance accountability. Market the program effectively. Ensure that insurers have the right risk information and timely engagement. It is also helpful to look through a cross-class lens and consider the premium volume placed across all lines with each insurer. And stick to agreed milestones in order to maintain control. The level of activity in the insurance market has intensified and marketing is taking longer. Staying on top of the timeline and using time to your advantage is crucial in order to proactively manage marketing results. At Marsh, we work with our clients to help them achieve certainty in the renewal process. Our job is to ensure our clients have choice and options. They may be challenging to accept in this environment, but you will have options. If I could leave you with a little advice today, it would be to start early and don't count on extensions. Have a well-prepared placement strategy and assess your organization's risk appetite prior to entering the market to ensure that you as the customer continue to drive your choices and options for insurance. You'll be limiting your options if you're reliant on an extension. We have seen options taken off the table after an extension is granted. As we all know, liquidity is very important for all of our companies right now, insurers included. On that note, I'll leave you with one final thought. This might be the year to also consider premium financing. I look forward to continuing this discussion during our Q&A session. Thank you, and I'll now turn it over to Heather Legg to discuss the reinsurance market. Heather?
Thanks, Sarah. Thanks for inviting me. I've been told that reinsurers are to blame for increasing rates. Well, as Sarah outlined, we aren't the only culprit, but I'm happy to have this opportunity to have a conversation about why reinsurance rates are likely to increase this year. Sarah gave you a quote from Moody's. Well, I'm sure you've seen some of these headlines during the last month or so by reinsurance executives. A few of my favorites are more rate needed, price increase is absolutely essential. Okay, you could argue that these quotes are reinsurers posturing in advance of the January 1 renewals, but does that mean it's fake news? On one hand, you're probably right, but this year, even the reinsurance brokers are joining in. The definitive, we will see higher pricing at 1 January in property. So let's take a look at the challenges and hopefully make sense of why these headlines are not fake news. Over the course of the next 10 minutes or so, I'll give you a high-level overview of loss activity both globally and in Canada, and hopefully not duplicate what Sarah has already highlighted. We'll also talk about available capital, including new entrants and ILF, and retro protection, and I'll explain those in a little bit more detail, and also discuss the global nature of reinsurance and why that's important. But before we get too far, I'm going to give you a very brief reinsurance primer. So you are all smart risk managers, of course, and you buy insurance for your home, your car, as well as the corporation that you work for. For illustrative purposes, let's assume that you all buy your property insurance from the same insurance company. Well, of course, that insurance company therefore has a fantastic portfolio of property risks, which any reinsurer would happily support. Well, the Canadian regulator tells that insurance company that they need to protect their property portfolio against the 1 in 500-year catastrophe, which seems prudent. So some smart people sit down and use models to calculate what that big loss looks like, the one that's only going to happen every 500 years. In our example, the 500-year probable maximum loss, or PML, is $1 billion. So the insurance company says that they can retain the first $100 million of each cat loss, so they decide to buy reinsurance excess of that amount for $900 million. Now, for a $900 million program, one reinsurer won't take all of that risk, so it gets shared, and the program gets structured to enable that sharing. Some reinsurers like the bottom end, where there is more risk, but also more money, and some prefer the top end, where the likelihood of loss is supposedly only 1 in 500 years, so they charge maybe only 2% of the limit that they are providing, and that's referred to as rate on line. For a $900 million program, you probably have about 30 to 50 different reinsurers taking a small share each, helping to spread the risk. The risk will also be spread geographically. For a program like this, you would normally place the treaty a third with Canadian reinsurers, perhaps a third in London, and then maybe a third in Bermuda and Europe and elsewhere around the world. So when losses happen, your home, your car, and your business get supported by all of these companies. And speaking of losses, 2020 is no walk in the park for this industry, unless it's this park. Sarah's already spoken to the wildfires. Historic wildfire outbreaks have been ongoing in the US since mid-August. For Canada, thankfully, we've had one of the quietest wildfire seasons since the 1990s. And then, of course, the hyperactive hurricane season. As Sarah mentioned, we ran out of storm names a few weeks ago, forcing the use of the Greek alphabet, which is only the second time since the 1950s. Hurricane Beta was the 9th named storm to make landfall in continental US in 2020, and that ties a record set in 1916. And sea surface temperatures across the Atlantic remain conducive to more storm formations during this year's hurricane season, so that's not great news. Of course, the riots. The vandalism and looting following the death of George Floyd will cost the insurance industry more than any other violent demonstration in recent history. Within the first half of 2020, I think Sarah had mentioned a number of 25 billion. The global insured cat loss number that I came across was 31 billion. Either way, it's high, 13% above the long-term average. Now, this industry, the reinsurance industry, can handle 1 year. That's what we're designed for. But this is on top of 3 years of heightened natural cat losses: hurricanes Irma, Maria, Florence, Michael, Dorian, Japanese typhoons, Trami, Jebi, Hagibis, Faxai. Of course, the Wolseley and Camp Fires in California, as well as the wildfires in Australia last year. Years of losses add pressure to reestablish profitability. Now, you could argue that we live in Canada, so let's look at Canada specifically. During 2020, we have experienced bomb cyclones, ice jamming to multiple hailstorms, including the June Calgary hailstorm, which will be the 4th largest cat loss in Canada's history. Not to leave out hurricanes, my slide picture is of Tropical Storm Teddy, just about to hit Nova Scotia a few weeks ago. It looks bad, but thankfully, while the storm brought very high waves, strong winds, and heavy rainfall, which definitely disrupted people's lives, it does not appear that there will be a major loss. But it's yet to be seen. And it's yet to be seen how these losses are going to be shared between insurers and reinsurers. One industry executive suggested that the reinsured losses will be around 700 million. And to keep that into perspective, the total reinsurance premium in Canada is around 2.8 billion a year. And a third of that is generally for catastrophe reinsurance programs. So not a great year, regardless. And unfortunately, 2020 is not an isolated year. Similar to the global experience, Canada has been repeatedly hit with large cat losses. Thanks to my friends at Aon Reinsurance Solutions, I've borrowed this chart, which tracks the total insured cat losses in Canada over 30 years. We used to be able to say that total cat losses were typically around 1 billion in Canada a year, but clearly this trend is increasing. And if you include 2020, there are 5 years with losses over 2 billion, and 4 of those have been in the last decade. In order to pay for losses and support writing business, the industry needs capital, of course, but also a healthy return to attract and retain that capital. According to Willis, global reinsurance capital declined 3% in the first half of the year. Now, of course, this masks the 30% hit to capital at the end of the first quarter, but equity fluctuations aside, the low interest rate environment that Sarah has already touched on is another factor altogether, and one that won't be going away quickly. So similar to Willis, and also tracks the global capital available within the reinsurance community, and noted that for the first half of this year, there was an overall return on equity of negative 1.5%. Sarah mentioned the combined ratio being over 100, and I believe the number's around 104%. So, you know, that's not great. So why does the capital even stick around? Well, because it's of the potential to improve that return through a hardening market. So of course, that's going to attract new capital, which you could argue could have a countering effect. However, in previous hard markets, the resulting new flow of capital followed significant losses, which had eroded that capital. Case in point is Validus. We were established following Katrina, Wilma, and Rita in 2005. The difference this time is that there is plenty of capital in the market. So while the market conditions are attracting new capital, it is really not expected that there will be a dampening effect on the rate momentum. And when we talk about capital, we are including both traditional capital provided by reinsurance companies, but there's also capital provided by third-party investors who are looking for diversification through what is called insurance-linked securities, or ILS for short. A cat bond, which I'm sure you've heard of, is a form of ILS. And by the way, you are all investors in ILS, since the Canada Pension Plan has been investing in this space since 2011. So the way this capital works is that the investors commit a chunk of money to an underwriting year. And at the end of that year, the money is either used to pay for losses or goes back to the investor. And that investor can then decide to keep that money or redeploy it into the next underwriting year. The problem is all of those losses. And those losses are taking longer to close out, what we now call longer tail, short tail losses. As an example, the Japanese typhoons in the last few years have taken much longer than usual to finalize. I'll use Typhoon Jebi as an example. Originally, it was estimated at 3 to 5 billion, but it grew to 16 billion over a few years. Osaka had been hit by 4 typhoons, a flood, and an earthquake over the span of 5 months. So that led to a volume of claims that they just weren't prepared for, and challenges to determine which event had caused the loss. And on top of that, there were contractor shortages due to the upcoming Olympics. So while all of this is happening, the investor's money is in limbo. They can't redeploy it to the next year. And this is what is called trapped capital, hence my trapped cat picture. After 2 to 3 years of trapped capital, the investors are less enthusiastic with this class. So the trapping of capital within the ILS market is also having an impact on reinsurers' ability to buy their own reinsurance protection, what is called retrocessional reinsurance, or retro for short. As ILS capacity has been trapped, the remaining available retro capacity has become more expensive. So average rates at last January were typically up 25%. For 2021, early predictions are again for rates to be up 15 to 25%. So this increase in retro costs will have an impact on the capacity that reinsurers are able to offer insurance companies. Effectively, in order to maintain the same net positions, reinsurers have reduced their gross lines to coincide with that reduced capacity. So what does all this mean for Canada? In my days of being a reinsurance broker, we argued that Canadian clients should be judged based on Canadian experience. And to be fair, for non-cat lines like casualty and property per risk, reinsurance renewal pricing will definitely be more influenced by the insurance company's own loss experience and underwriting. But when it comes to catastrophe reinsurance, the view has to be global. There's $590 billion of reinsurance capital globally, but only 0.4% of that is in Canada. The Canadian insurance market is supported by global reinsurers, particularly on the cat side. And those companies, the Canadian reinsurance companies, are really just branches or subsidiaries of global companies. Validus is number 26 in the list of global reinsurers, and yet we have offices around the world to support a global portfolio. In order to retain the necessary capital to keep the whole insurance industry working, including the amazing clients that are ultimately insured, we need to work towards long-term financial stability. As a reinsurer, we're a little bit removed from the front lines where you may all be feeling the brunt of rate increases and coverage decreases. So thank you for the opportunity to share the reinsurer's perspective. I hoped that helped. And now I'll pass it along to Lynn. Thank you.
Thanks very much, Heather. Well, I'm in the fortunate position of batting cleanup this afternoon, so I'm going to cover off some of the emerging risks. Sarah and Heather have done a great job in walking you through sort of the current environment and thankfully speaking on behalf of the many insurers on your program and some of the challenges facing them. But let me just try and put it all together for you from an insurer perspective. So, you know, we've talked about the global pandemic and its impact, but I think Sarah and Heather also laid out very, very nicely that there have been increasing claim costs. So talk about loss trends and increasing claims, plus the Nat Cat situation, both globally and in Canada that Heather outlined. Overlay that with a global pandemic, and I think you've got a really challenging time in the Canadian market. We are dependent upon global reinsurance support. So as different carriers look through their portfolio to get to sustained profitability, it's in a low interest rate environment, and that means some shift. And Sarah's advice is the best advice. Get out in front of it. You may need more players to fill out your subscription or your excess layers, and they may be looking at different areas of focus, either moving up in your tower, moving down, or structuring things a little bit differently. And it's all going to be individually driven by those component pieces. The secondary or indirect impact of everything that has gone on in 2020 is really the economic impact. And that's where we're spending a tremendous amount of time working with our clients. And I tend to follow Tiff Macklin, the governor of the Bank of Canada. I think he gives us good economic insight, but they're concerned about the economy. We're definitely in an official recession here in Canada, and that's anticipated to flow through 2021. So moving on to globalization. So many of your organizations have footprints or sales in different places around the world. And just one of the trends that we pay attention to within our multinational space is globalization, but also change in trade. And many of you are looking at alternative or captive type arrangements right now. That's one of the responses to the current market. Make sure you bake in some of that guidance up front, because the rules of engagement are moving in country and we're helping contain that. But your supply chain, this is one place where, Sarah was bang on, get out in front of your renewal. But I'm going to go one step further. I'm going to actually say many of our clients are kind of peeling back and looking at a blank page as they assess their risk and as they build up. They're building up their real estate values. They're looking at the current economic impact. They're taking another look at their revenue forecast. And when it comes to supply chain, we're very used to, in risk management, corporate Canada, planning out emergency preparedness, business continuity, and also structural and time-related plans. So this is a really good time to get with your procurement team and just make sure that the supply chain, that you fully understand the when and the where,
some of the time element, and those of you who work in big industry, large construction, Catherine, know that some of these component parts come from far, far away and take a long time to get through. So another emerging risk is innovation and technology. We're shifting all over. What I can tell you is at the top of the list of our concerns, and our growing concern on your behalf, is cybersecurity. But if one piece of advice, keep your cybersecurity very diligent with your employees. Make it fun. Make October and November cybersecurity month. You want to make sure your carriers have all the resources available to you, and a heightened risk that I need to draw to your attention. So the next one is really social inflation, and both Sarah and Heather talked about those long tail liability lines, but I'm going to overlay social inflation. We call them nuclear awards. We call them increased and heightened court attention. You might think because there are no jury trials right now, because we've gone to online mediation and just judge trials in some jurisdictions, that would bring down the awards. And then finally, the emerging risk that I believe personally, and this is now my view, and I've spent a lot of time on this one, is sustainability and climate change. Back to the Marsh report at the World Economic Forum and the global risks. For the first time, the global risk register was dominated by climate related. Heather didn't get into the nitty gritty of the science, but I think as risk professionals, we have to be believers. And so you're seeing increased nat cat activity. You're seeing a real focus, depending upon your organization's place, whether you're publicly traded, but certainly Alberta is spending an inordinate amount of time presenting to the investor community exactly what their carbon footprint is and the path to carbon neutral. And that's one area where I would really guide our risk management professionals: get educated, get engaged, make sure you're contributing to the conversation in your organization. And it's a big one. We are going to talk about sustainability for a long time to come. So Catherine, I'm sure we've got some questions. I'm going to pass it right back over to you.
Thank you, Lynn. Thank you, Sarah, Heather, and Lynn, for your very informative comments and your practical advice. We would now welcome any questions that our audience may have.
So I have a question. So I'm in an industry that already had very few markets available to me, and that market is shrinking even more. Some of the municipalities don't have the capacity to take on much more higher retentions than they already are. They may be forced to, I understand that. We don't have the option of having a pool. That was experimented with the reciprocal, and it failed. And I'm not sure that there's an appetite to resuscitate that. So Sarah, you gave lots of tips about how to approach the market, but I'm looking for some advice on how to, as an industry, perhaps lobby the marketplace to see if we can't get more interest, whether that's some kind of structure, lots of layering, but we can't go without. We're almost to the point now of the position we were in the 80s with the liability crisis, and municipalities just can't go without insurance. So it is a personal question, and it's probably got multiple layers, but I'm just looking for some quick overview of, is there a lobbying way to do this or some other way we can tackle this?
Tina, thanks so much for your question. Very much appreciated. And first of all, I share your pain. You know, without a doubt, the municipalities have been hard hit in the marketplace before even COVID came into play. I think there's a couple of things here. One is we're spending a lot of time with the insurers trying to develop additional capacity where in the past they may not have had the same level of interest because of the rate environment and a very soft environment. And now there's a little bit more interest. And so that applies not just to municipalities, but across the broader scheme. We're saying to our brokers, do not rely on what an insurer's appetite might have been 2 years ago, or even a year ago or 6 months ago, because that is constantly changing. The municipalities and a lot of other public entities, as you know, as a direct result of COVID, we have actually been involved with lobbying, if you would, and raising the issue to both the federal and provincial governments in order to consider a private-public partnership in order to be able to assist in economic recovery, so that on a go-forward basis, and rest assured, there will be some other type of pandemic that comes through, recognizing that the insurance industry cannot sustain those business interruption losses in particular. So we're very focused on that, as well as there are a number of other lobbying efforts within the insurance industry in Canada, with the IBC and a few other associations as well. So we share your pain on that. It isn't specific to municipalities. It is an area where we have got extreme focus on that right now, and we need to find a way to continue to expand that capital pool, which is challenging. So share your pain. Again, I do think there's probably some optimism, but we're going to have to lobby that together.
Thank you, Sarah. I appreciate that.
Lynn, Heather, do you have any additional comments?
No, I think Sarah has covered off a challenging market in a challenging space. I can share with our community of risk managers that your individual risk characteristics matter to the underwriters, and risk selection dominates the way insurers are thinking about an industry or a segment right now, and therefore putting forward your submission and your organization as best in class, demonstrated through risk management and risk control and even risk culture. I would just encourage you to put that forward, request meetings with your carriers. All of your brokers are going to be amenable to facilitating that, and tell your story. And it's interesting because we see major corporation, publicly traded D&O meetings as a matter of course, where 50 or 20 underwriters will get in a room together to listen to a CFO or an investor presentation. And I think sometimes we think of that as a unique set of circumstances, when I believe you would have underwriters available and willing to listen to a risk manager bring their risk forward. So I would say think about the risk characteristics first, and the differentiation, and then talk to your carriers and brokers about where they're seeing the losses. And we are seeing attritional fire losses in public entity business. So be proactive in the way you're responding to that in the market. I hope those hints are helpful, Tina.
Yes, thank you very much, Lynn. That is helpful. There's a couple of questions in the Q&A list. I'm happy to read them to you if you like. One question was, thanks for the presentation. How long will this hard market stay?
Well, I'll ask the speakers if they can pull out their crystal balls now.
I was going to say, I think we should start with Heather at the top of the house, where, as Heather described, that ILS trapped capital, because I think that actually drives some of the response. What's your crystal ball say, Heather, as we head into 1/1?
Well, it's interesting. I mean, the ILS is definitely one of the factors driving this, but that only makes up about 15% of the total capital. So it's not necessarily driving it all. I think that, you know, I'd read a quote from a reinsurer the other day and talking about we've had a softening market for over 10 years and the pricing where it is now is you know, less adequate than it was 10 years ago. So, you know, hopefully longer than a year. But yeah, certainly it is going to be hard for at least a few years, I'm expecting. You know, we're sort of, last year when the reinsurance rates weren't going up, we were sort of getting squeezed in the middle. You know, the insurance rates for you folks on the risk side were certainly going up. Our retro rates were going up and we weren't getting any rate increase in the middle. So we weren't benefiting from the rate increases on the insurance side because we really rate reinsurance based on exposure. So yeah, so it's inadequate at the moment, and hopefully it lasts for more than 6 months.
Thanks, Heather. I'll maybe step in next. I think if we were guiding your budgeting for 2021, we would encourage you to be robust in your budgeting. You'll get individual data points from your brokers across a spectrum of insurers by line. But I think the economics matter, and we started with, we're in a recession, we have very, very low interest rates, and I think we can expect extremely low interest rates for a period of time, which means your carriers to stay afloat and to manage through that environment really need to target a 95 combined. And unfortunately, if you look at the MSA research results for the first half of 2020 in Canada and peel out the commercial carriers, we're sitting well above, as a collective group, 115 or 120% combined. So I would watch the signals from the economics of the market, talk to your insurers and talk to your brokers about that guidance. But we would see much of the market dynamics that we're currently experiencing extending well through 2021. And Sarah, maybe you can help put all those pieces together and bring us home.
Okay, so I'm glad we started at the top with on the reinsurance side and then down onto the direct insurers and now onto the brokers. I think there's a couple of things. I mean, first of all, as I had said in my comments, this is now the 11th consecutive quarter of price increases, and I think certainly for the balance of 2020 and going into Q1 and probably Q2. Now that's my crystal ball. The other side of things is that without a doubt, because of profitability challenges with a number of the insurers, coupled with insurers are now starting to change their appetites in certain areas where they have historically not been interested in writing certain classes of business because of sustained very low premiums. There is now more of an appetite for that, and that is starting to change. And as brokers, that's exactly where we're pushing the markets to invite them, if you would, and assist them in creating additional capacity on that basis. So, I do see some optimism on that basis. Insurers who haven't traditionally been interested in doing so now saying, for the right risk, we will now take a look at that. So that's number one. The other thing that I'll say is that I referenced in my comments about going more broadly. We talked about Lloyd's and some of the challenges that they've had. But for multinational risks in particular large risk management, we are finding capacity and insurers who are interested in other parts of the world in Canadian business that historically had not been. And so we spend a lot of time working with our hubs on a global basis to see what that interest level looks like. Remember that insurers are always looking for a spread of risk, and that includes a geographic spread of risk as well. And so, being able to access on a broader basis, you can often find additional capacity that way. And I do see some optimism. Again, we're not through the cat season yet. Canada was hit badly so far. Let's hope we don't get any ice storms coming through as we go into Q1. But I certainly do see that there are some insurers who are wanting to broaden their appetite.
Thank you. I think we've covered off that question very thoroughly. And you've given us some great insights as to what to expect in 2021 and potentially even beyond. The next question is, are insurers looking to risk share with governments to reduce the impact of the hard market during a recession? It's an interesting question. I'm not sure that our government is looking to do any risk sharing, but maybe Sarah and Lynn and Heather, you have some additional insights.
Yeah, I'll just kick that off, and then Lynn, I see you come off mute as well. I mean, I would say that what we've been focused on with the government, and it's not just with COVID, Marsh & McLennan Companies has been involved in a number of jurisdictions around the world to try and come up with some systemic issues. So whether or not that's flood, whether or not that's quake, to have some form of a risk sharing mechanism in place, or a risk funding mechanism. Certainly with respect to COVID-19, you know, and future pandemics, we feel very strongly that there needs to be some form of partnership to be able to fund. The question becomes, do you pre-fund it or do you fund it at the time? But there needs to be a mechanism by which to do that. It's interesting that in some parts of the world where we've been having conversations on either the flood or terrorism is a good example, or on quake or other systemic issues, there are some governments who are looking to take a look on an aggregate basis at those sort of catastrophic risks, if you would, rather than focusing on any one in particular. But I would say that where the governments have been focused has not been on the hard quote unquote, the hard or hardening market, you know, which is a profitability challenge. They're focused on more systemic issues that are going to be very specific to individual countries. Lynn, over to you.
Thanks, Sarah. I think that's hugely helpful. We actually differentiate between Nat Cat and pandemic. I think pandemic is a very unique global situation that is not as contained as a Nat Cat event from a geography or a time perspective. But I'm on the PASIC board, which is the insolvency fund of the P&C industry in Canada, and a tremendous amount of work with the federal and provincial levels of government, but joining with the IBC to really seek systemic financial backstop for earthquake in Canada. I think that is really the big one. And the industry works almost as a shared pool. So if a carrier were to become insolvent, the rest of the insurers come together and based on their market share would contribute to fund the claims and the payouts to see that wound down. And so we do reach systemic critical nature at a $30 billion earthquake. So that's the point of the tipping point for the industry in Canada. Prior to the global pandemic, I think the federal government was expressing some interest in working with the industry. And of course, the immediacy of what's happening today has sidelined some of those discussions, but we're going to continue to pursue at least the conversation, and the education is so important that we have ministers and decision makers in government that understand the critical issues. And someone said to me recently, what can we bring? We can bring math and modeling, and both are greatly helpful to trying to wrestle some of these issues.
Are there any additional comments?
No, I think really the concern here is the hard market. And Lynn's right. I mean, the discussions that are going on are more so around the Nat Cat. You know, I'm aware that there's discussions on the flood side as well. And, you know, obviously flood is covered under commercial policies and only recently being covered under personal lines policies. And that's one, you know, the ones that are most at risk can't get cover. And so there is, I believe, some discussions around that. But all of these things require really good modeling to be able to quantify the risks. And so flood modeling is only a recent new development in the Canadian market. So yeah, it's from the Nat Cat side that I'm sort of more involved in. But yeah.
The next question we have, and this one is I find very interesting, is that how are virtual marketing meetings going? And what is your advice to make them more impactful? I think the majority of us are spending a lot of our days on Zoom and Teams meetings. And so how, for anyone who is going into the renewal cycle and doing it virtually, any words of advice so that how we can make ourselves, differentiate ourselves from our competitors?
Yeah, why don't I kick that off, since we're, as the brokers, often the ones who are actually orchestrating those underwriting meetings. So I think there's a couple of things. First of all, I think for those risk managers and their teams who have spent time getting to know their underwriters over the last couple of years, I think the meetings are much easier, if you would, because at least you've got a commonality. You know the individuals, and it's a lot more personalized, which is hugely helpful. So for all of those times that we were saying, including during extended soft market, that those meetings are critical, I think now it really does come home to roost in terms of having those relationships, at least visually. The second thing that I will say is that it does depend on the way and the format of those meetings as well, and a lot of it depends on the coverage line in particular. Our preference would be to have smaller individual meetings, just like in person. Those tend to have more of an air of intimacy, if you would, and the ability to speak more freely, rather than having the Hollywood squares, as we call it, of 15, 20, 30 people on the line. The other thing that I'll say is that within whether or not you're using Teams or whether or not you're using Zoom or WebEx, take advantage of the way in which the features of those particular platforms can be used. So for example, for a Zoom meeting, which is one that I'm most familiar with, what we try and do is make sure that the client representatives can be seen on the screen, and so we're not showing 15 people or 12, so that you can actually concentrate on the individuals that are speaking. If a deck is being used, then make sure that you've got the screen, the slide that's being shown, and then just having the individual speaker in the smaller lens, so that you don't have all of the participants down the side. People are curious, right? So they're going to be scrolling up and down. We've all done it. If you provide people's photos, then that's going to distract them from the topic at hand, or the discussion at hand. So I do find that that's very helpful. There is something about you've either all got to be on the screen and participating that way, or almost not, because it's just like when we were in our offices and you've got people in conference room and then some people dialing in. Those who are dialing in almost always don't feel as though they're quite as in the meeting and able to offer up their comments, concerned about stepping over each other, that sort of thing. So I think it's all about trying to make sure that you're truly taking advantage of what are we trying to achieve here. The underwriters want to hear from the client. It needs to be very well facilitated, very well organized, take advantage of the technology, and above all, make sure that you're managing it, facilitate it to the time that is allowed as well, which is critical. So those are just my thoughts. It's not ideal, but in a lot of cases, it can actually be a very effective meeting. But again, those relationships help, and the way in which you organize it helps.
So Sarah, I would agree with all of that. The only thing I would add is have an agenda. Your brokers won't let you get in front of us without one, but also please assume that for your insurers, there are a lot of new people to the industry. There are a lot of new underwriters. We've certainly added a lot of professionals in 2020. So please don't assume that everyone knows your risk 100% or the history. Take a moment and tell us the story. I'm finding that the most impactful meetings are the client actually telling us this relationship goes back to this particular point in time, and here's been the evolution of the risk. And most importantly, baseline last year's renewal, here's what's changed. and here's why. And so please share that information with us. I agree, slides help. There's a great Harvard Business Review article about hosting virtual board meetings, which I'm really struggling with because there's a lot of slide content, and the advice is less is more. And so if you can give yourself 8 or 10 slides that go to the facts and tell the story and share your risk management journey, I think that's going to be a very compelling meeting because it's all around the conversation. So in complete agreement, Sarah.
Thank you. Those were very practical tools. And for those of us who are heading into renewals, I think that it will assist us as we go forward. I think we'll just end to keep with the time frame that we've got for questions, and really pleased with the questions that have come in. Why don't we end up with one more? And we won't, to all of our registrants, apologies that we can't answer all of your questions, but I'm going to end up with this last one for our panel. The day-to-day things we do in our industry has changed dramatically. We're having this conversation remotely now. As managers of large groups of people, what do you think will stay changed after the pandemic has ended, and how do you think change will impact the way we do our business? Can I start, Sarah, with that one, please?
Yeah, it's a great question. I mean, it's in a lot of ways, the way in which we are being forced to live our lives, both personal and professional, has got some extraordinary challenging things, but yet there are some silver linings, I think, as well. You know, one of the things that I think about from a personal perspective that I brought it, you know, to bring into business is that I think this has made us, and the way in which we have to work has made us all that much more empathetic as to what others are going through. And I think a little empathy in both personal and business lives is hugely helpful. And so I would hope that we're able to hold on to that. I think you know, the way in which we're communicating, while we may not like the nonstop Zoom, and it definitely has its disadvantages, but I think we've certainly seen that it has allowed us to communicate more regularly, and it has had the impact of being much more of a flat communication. And by flat, I mean just in terms of hierarchy, which I think again has been extraordinarily helpful. So you know, we've got a much broader geographic reach now to be able to include people in meetings who wouldn't normally be necessarily able to travel in for those meetings. And so you know, I think we're getting a much better cognitive diversity of thought and contribution, if you would, which is absolutely critical, I think, specifically in our industry. And I'm not meaning just the necessarily the gender or the ethnic diversity. I'm meaning a much broader thought process as well. And so that's one of the things that I think that we can absolutely continue, and we should continue to strive to do that, because that's going to be good for all of us, both personally as well as professionally.
Heather, can I turn it over to you, please?
Sure. I think, you know, the reinsurance community was very reliant on face-to-face negotiations. And I'm sure that's true across the whole insurance industry. And we really have had to figure out how to go digital and how to have these conversations face-to-face, but, you know, over Zoom. And some are better than others, for sure. And I still hear that some of the brokers are really hoping that we can be face-to-face for the renewal negotiations when it comes down to December. But honestly, I'm quite happy in my little bunker in my basement. And, you know, I think that might likely continue. And I think people are going to be more flexible in their work habits and more empathetic towards people's lives and what's going on in their lives. So I think that has been a real silver lining of this pandemic, and I hope at least that does continue going forward.
Absolutely support and agree with the comments that Sarah and Heather have made. A couple of things. What's changed? We can all work from home. We have proven it. We have not missed a beat as an industry. The connectivity has been right there. We have taught a lot of our veterans, new technology and new ways of working. And I think it has brought the community together. So that has been a real positive. I can't imagine being onboarded or joining a new organization in the midst of a global pandemic, but we've added 50 professionals to our firm remotely and electronically. And I'm encouraged but stunned at how smoothly and to Sarah's point, I reach out to all of those new hires. I make sure I'm connecting, and they are finding that they can grasp the culture of our organization through that process. So I think we're getting pretty creative in the way we engage with our team members. And then, I would just finally leave it. I echo Sarah's comments around diversity. I would leave it with the word empathy, which both Sarah and Heather employed. And as a senior leader, my understanding of the need for mental health benefits for every single one of my employees, regardless, whether it's grief or a young student who's concerned, or health, or aging parents, or young children, what we have had to manage through in the past 6 months has tested all of us in different ways. And if anything, that focus, and for us, it's Health and Wellness Month at AIG, that focus will not go away. And so the empathy will stay. The connectivity will expand, but we still look forward to getting back together to have lunch with all of you. So maybe I can leave it on that, Catherine.
Thank you very much. Heather, Sarah, Lynn, your responses to our open question and answer period we gratefully appreciate them. We appreciate your honesty and your openness to respond to them. I think that the final comments that we have really nailed it with regards to what we're all experiencing, both in this hardening market, in this working from home situation. And we really appreciate the time that you've taken to put your presentations together and to be with us today. Thank you. I'll turn it back to the controller, please.
Thank you for taking the time to join us today in this discussion on how our service providers are meeting the challenges under the current pandemic circumstances. I am Ginette Demers, and I am Director of Risk Management at Domtar, and I have the pleasure of being your moderator for this session. And I also have the pleasure of introducing you to our great panel of guest speakers. But before I do so, I just want to take time to thank them for taking the time away of their busy schedule to join us today, to join us in this discussion. So without further ado, Mike Wynn, President, just recently named President of Sedgwick Canada, so congratulations to Mike. Katie B.J. Schultz, who is a founder and partner at Schultz Frost, and who is a well-known and committed contributor to the insurance industry. And last but not least, Jeff Ritzma, Vice President of the 30 Forensic Engineering Group. So thank you, guys. How has Sedgwick been coping with COVID since March?
Thanks, Jeanette. Good morning, ladies and gentlemen. My name is Mike Alwyn. I'm part of the Sedgwick Canada team. As many know, Sedgwick is a multinational insurance services company that employs 27,000 colleagues across the world. It is a growing company with a global reach. In Canada, we have approximately 500 colleagues providing adjusting, TPA, engineering, and many other lines of business. I think we all remember the news in late January when Canada saw their first case of COVID. No one could have predicted that today, some 9 months later, we are still in the midst of a pandemic and just about to enter a second wave. I certainly didn't. It amazes me how quickly the pandemic and this virus in particular has spread. My family was one of those families that decided to go away for the March break. We left for Hawaii the week before the break, really thinking nothing of it. I remember the first 2 days were great, nothing but sun and sand. By the third day, the stories started appearing of the fast spreading virus and warning against travel. On day 4, there were calls for Canadians to come home. By day 5, international flights were being canceled. We thought of writing out the pandemic, staying in Hawaii. Had we done that, we'd probably still be there. Although it certainly would have been enjoyable, I'd probably be without a job. We were lucky enough to get home, but found ourselves in a very different Canada. Far different from the one we left. We were confined to what my kids described as house arrest for 14 days. And much longer than 14 days if you include the time I didn't allow their boyfriends to come in the house. While I was away, both my international and Canadian colleagues were working nonstop and making preparations for lockdown. How are we going to care for our colleagues and properly service clients? That was our focus. I'll briefly review how Sedgwick initially reacted to the pandemic and what we continue to do, which are the keys to our success. In the early days, as we know, once the pandemic was declared, each province made their own plans and orders as to how they intended to deal with the pandemic. Most provinces ordered a lockdown, giving businesses and citizens a few days' notice. Businesses were classified as essential or non-essential. You will recall that there were some blurred lines as to what was considered an essential service. Adjusting was one of those blurred lines in certain provinces. Common sense prevailed and governments realized that they had a duty to their citizens of making sure that if they had suffered a loss, insurance services were there to assist individuals already under the stress of a lockdown. Within 1 week of the lockdown, insurance adjusters were considered an essential service throughout the country. Within 72 hours of the lockdown notice, Sedgwick had over 90% of all colleagues in Canada equipped and working from their homes. The keys to managing through the pandemic process starts with teamwork, especially at the management level. Sedgwick has a strong and dedicated workforce. We have invested and continue to invest heavily in technology. We pre-planned for disasters, although I don't think anyone really planned for a virus pandemic. Our strong global network also allowed for the transfer of valuable resources. While I was trying to relax on the beach, colleagues at home were working hard in establishing a COVID task force at the corporate level. In Canada, we selected a COVID-19 coordinator. This was a senior manager, and this individual's primary and full-time responsibility was to coordinate and relocate all colleagues to their homes and ensure they had the necessary tools and resources. Senior management held daily meetings to discuss the latest updates on the pandemic and how it would affect the business. This was determined by the needs of our colleagues and clients. Even to this day, we still have the COVID task force in place at the corporate level and meetings on a regular basis, at a minimum weekly, to review the needs of colleagues and clients, which as we know can change very, very quickly. People first. Our colleagues are the most important resource. Sedgwick has strong core values embedded within the culture. If you ask any colleague, they can tell you that we live by the slogan, caring counts. This applies to the way we treat each other, our clients, and their clients. Sedgwick has invested heavily in promoting these core values. To build the desired culture takes time and dedication. It just doesn't happen instantaneously or overnight. This is especially true in a large global organization like ours. I've been with Sedgwick for 3 years, and I recall the day I joined, I had that sense of a caring culture. The beliefs need to be held by management and maintained. We were fortunate to have these core values in place well before disaster struck. To date, we have been fortunate enough to keep all Canadian colleagues on the payroll. This has given the colleagues some security and eliminated the financial uncertainty that many people are unfortunately facing in the current economy. The result has been that colleagues recognize they are appreciated and can work effectively without added stresses in their lives. Communication. In-person meetings with colleagues or clients just doesn't happen at the present time. They're prohibited, and rightly so. Having a clear communication channel between management and colleagues between colleagues is essential. Many view the office as a place to socialize, communicate with others other than their immediate family, and to have a sense of belonging and connection. We recognize this. Some departments and managers arrange for virtual coffee breaks. Every once in a while, a manager or a team lead will arrange for colleagues to join by WebEx or Zoom. They will have a virtual face-to-face discussion for 15 or 20 minutes that allows colleagues to check in with each other and just simply connect. Virtual social hours where meetings are held with clients to discuss the issues that they're facing or simply just to stay in touch with them. We send out weekly well-being updates and success stories from around the globe on how to deal with COVID or just stress, and we remind colleagues of all the available resources. These updates are separate from the bi-weekly updates sent by senior management to make colleagues aware of developments within Canada. Also in Canada, we have held several virtual town halls. These are held by Sedgwick Corporate and also the Canadian managers. The purpose of the town halls is to let colleagues know that they have support and to give them updates on where things stand. Things of importance like possible return to work office dates. We are not in a hurry to return to the office. Things are working out just fine. Even though lockdown is over for businesses in most of Canada, subject to certain restrictions and the second wave, as it stands right now, we are possibly looking to return to the office in January. But even that isn't set in stone. We'll gauge the safety as the time approaches. If it's safe to do so, we'll reopen. The management teams meet frequently and sometimes daily to address the critical issues. Adapting. There was an immediate need to source safety equipment, such as masks, sanitizers, gloves, and as we all know, even toilet paper. We are fortunate to be able to rely on global colleagues to send us supplies until we could stock up on our own locally sourced supplies. This also applied for computers, phones, and other equipment that our colleagues needed to be able to operate from their homes. We're always looking to prepare for the future. Nothing is certain in today's environment. No one is clear on exactly what the new norm will be next year or even next month. Will we still be working mostly from home? Will there be a balance of work office, or will everybody return to the office? In either case, we need to be prepared. We have to rethink how we respond to situations such as catastrophes, both domestically and internationally. We all recall the floods and storms in Alberta this spring. Mobilizing colleagues to another province so soon after the pandemic hit, without the usual support of airlines, rental cars, hotels, was challenging to say the least. Attending loss sites with proper inspection protocols or utilizing new technologies required training. These past few months have proved very challenging in getting colleagues to assist our friends in the US with the raging fires on the West Coast and the storms on the South Coast of the US. Travel to these sites, meeting visa requirements in a COVID environment, as well as quarantine requirements, takes planning and thinking outside the box. There was a clear need for investment in technology for such items as laptop computers, cell phones, and printers for all colleagues. We also needed new software, specifically for remote technology. We had to look at the demands of our customers and clients, less physical inspections and more remote or desktop services were demanded and required. This resulted in an expansion of our desktop services and a reduction in our road or roadside services. With the new technology, our colleagues needed more training, which we were able to accomplish with our own in-house training schools. Planning and resources. Planning ahead is key. I'm not aware of any business that thought ahead and planned for a virus that was capable of shutting down the globe. And if they did they include a recovery plan that may need to be extended for years? If you can find someone that had that kind of foresight, you better hire them. Businesses do plan for other disasters, such as devastating earthquakes, volcanic eruptions, tsunamis. However, these are mostly one-time events instead of a continuous threat. We do plan on how we approach a disaster situation in the short term. But if COVID has taught us anything, it's taught us that we need to plan for long-term disasters. And with long-term disasters, there is a need to have a proper succession plan for colleagues, IT, and all resources. Our keys to success, I feel that we have weathered the COVID storm quite well. There's no question that our business has been rocked by the downturn in the economy, as with every other Canadian business. However, Sedgwick's success has been a result mostly because of the frequent communication with colleagues and clients, the proper communication, technology investments, and planning. The greatest keys, though, for our success has been a dedicated and motivated colleague workforce and the strong backing of our global resources. Thanks for your time. Jeanette?
Thank you for sharing, Mike. It's fantastic to see how well Sedgwick has adapted through since March and how you continue to be resilient. Thank you for sharing. Katie, you are evolving in a different arena than that of Sedgwick. So how has your firm adjusted and how has it been affected by the pandemic?
Thank you, Jeanette. Yes, as an insurance firm, and that's exactly in all that Schultz Frost does, we deal with coverage, third and first party disputes, investigations, lots of anti-fraud work, and as some of you know, I've done a tremendous amount of training and program design within the insurance community. So we are all about insurance, and absolutely none of that has changed with COVID, but how we have done things absolutely has. And what I really wanted to share with you was about how COVID from March 16th until September 14th has changed litigation and court and tribunal processes, because fundamentally those changes impact indemnity, interest, risk, and expenses, and those are all the things that are top of mind in me providing services to my clients, and certainly top of mind for my clients. So on March 16th, the courts in Ontario suspended or tolled all the limitation periods. And while I very much admire an international company like Sedgwick and their ability to pivot and the resources that they would have globally, the courts in Ontario and the tribunal system was already really very frayed. They didn't have enough resources to do the job the way it needed to be done, even pre-COVID. So very long wait lines, lots of delays, lots of resource management challenges. And this, of course, became robust once COVID set in. And before I go on, Mike, I wanted to share with you that while you were in Hawaii, I had, for the third time in my children's school career, booked March break for the wrong week. I just get busy with my trial schedule, and sometimes I mess up their calendars for their school break. So they were ecstatic to be out of school and away the week before the pandemic. And we, luckily, much like your family, we did get home safely and without having to rebook anything. I think that one of the resilience pieces for managing a law firm, and I'm also a professor at the Windsor Law School, so I have a lot on my plate. One of the ways that I went into COVID being able to be resilient was that I had had a week of rest before going into what has certainly been the most challenging time of my 20 years of practice. So March 16th, the courts completely shut down. And I work in the tribunal and the court environment. The same thing applied to the tribunals. They were working very hard to even get any kind of remote access for their staff. It simply wasn't designed as a system for people to work from home, whether you're talking about a court office administrator, let alone a decision maker like a judge or a master. And this took some time. And what I realized looking through my calendar to prepare for today was that almost 80 days of attendances for me, hearings, trials, summary judgment motions, other contested matters, appeals, they were all vacated. So in 2021 and 2022, I will be expected to have my normal calendar, which is rigorous on my easiest of weeks, as well as somehow fit in approximately 80 days of hearings that were lost while the system was essentially shut down. And what does that mean as a legal service provider to my clients, and how could I help my clients with that? Because being frozen in time absolutely meant that time is money, and I needed to help my clients manage that increased risk. And also, we all had to develop new expectations about going forward. So I want to share with you a little bit about how Schultz Frost pivoted in what I call the upside down. So the first thing was for us, we actually just celebrated our 5th year anniversary as a law firm on August 31st. And so lucky for us, our technology at the long end was only 5 years old. And when we first designed the firm, it was with the intention of being able to be completely nomadic with our work. That's how I feel now, although I do feel stuck in my small home office most of the time. But because we wanted to be able to work from wherever, whenever, our systems had been designed at the get-go to be paperless and also to be very light. So I have a small, very portable, light laptop. I also have a 2-pound portable second monitor. And so whether I was setting up in a courthouse or whether I was setting up in my backyard, which is as far as I feel like I have gone since March 16th, I could really set up my desk and work remotely. And this is something that my entire team could do. So March 13th, we sent everyone home, and they have all worked completely remotely in that time. With very few issues. I'm going to knock on wood, because if I say that out loud on a program like this, you know that there will be an issue. It's Murphy's Law. Externally, though, technology was another challenge. I mentioned that the courts and the tribunals, they are just now adopting and implementing some technology that will assist with virtual trials. That will be interesting. And also, frankly, managing the day-to-day of litigation files in a remote environment. So I've now done a few pre-trials with the judge, either at home or potentially at their cottage. I would have had to have traveled for hours to attend that event at the court. If I had to do that in the winter, I'd often have to tack on a night before, just in case my flight would be canceled because of weather or freezing or anything like that. So we've adapted in a way with COVID in the court system that I think we probably would have gotten there in the next 5 to 10 years. But certainly there are tremendous positives from my clients' perspectives and my own resource management and efficiency by being forced by COVID into being virtual. So less time for travel, less cost for travel, less environmental impact with the travel, and still being able to, quite frankly, get the job done. New skills, absolutely. Running a 2-week hearing with 40 witnesses on Zoom, it'll raise your heart rate, absolutely, especially if technology isn't a comfort zone to begin with. But it's something that frankly, now that we're doing it, I think we're going to do well with it. My clients, as insurance companies and self-insured companies, you know, some of them were quite advanced with their technology, and many were purely paper and sending everyone home, where everyone still generally is, has been a different challenge for different clients. And so one of the things that I've done is I've actually transmitted my complete file in a secured way electronically to clients whose paper files are still sitting in the cabinets at their offices. And that was one way that we could support our clients to still have access to their files. Opposing counsel is another issue. And in the beginning, I'm going to tell you, I thought it might be somewhat generational. And meaning that, and you know, lawyers like to practice until we're all quite long in the tooth. And I thought it was the much more senior counsel, like kind of 65, 70 plus, that were resistant to the technology or to doing things in a virtual environment. And what I've realized is it probably isn't that. It's probably the merits of your case and the lawyers, defense or plaintiff, that feel like they have a strong case, want to move forward with examinations and motions and getting to a trial date. And the ones that might have a lack of confidence or strategic plan for their cases are the ones that are saying, oh, my client doesn't have access to any technology. We can't proceed. And so that's something that we're evolving with as well, and figuring out who in our industry is cooperative and enhancing their technology and who's using it as an actual shield to be able to move forward. Another expense and concern in our risk assessment, though, with COVID and with delays is experts. So I have experts that I've retained 4 or 5 years ago for a trial that should have gone this year or next year. And frankly, some of those are medical experts, and some of them have completely withdrawn now from the medical legal community, if that's the type of matter that I've been working on, because they're so involved with COVID management. And they do practice in healthcare aside from being an expert from time to time. So that's changed my access to experts and how I engage experts. It's also frankly changed what my experts are willing to do in terms of site inspections, in-person examinations of plaintiffs, if that's what's involved. And that's a resource challenge. Because we never had enough really good experts, I think, to begin with. And it also is causing a delay and more time being needed. So when I think of COVID and the impact on the courts, on time, indemnity spend, we know as risk managers that a longer tail file never ever means less indemnity. It creates more risk. More time equals more risk. In Ontario, we pay interest on judgments, pre-judgment interest, post-judgment interest. So we don't like a longer tail file. We like to get to the end as efficiently as possible. And we also know that if I've prepared for a trial this year and I don't get to do it and I have to do it next year, that unfortunately, even with efficiencies, there's going to be higher legal fees. So these are all challenges from COVID that we just are faced with. So for me, in the context of co-managing a litigation insurance firm, I approach COVID as I have for the firm for 5 years. Constant growth mindset and comfort in discomfort. I say that mantra to my team and to myself day in and day out. A culture of listening, and I think Mike's touched on that, and Jeff's going to talk about that as well. and also, frankly, just hope that we all stay as safe as we can and get to the other side of this eventually. So Jeanette, thank you so much for including me in this program.
Thank you very much, Katie. That was quite interesting. And certainly in your case, we see and we realize, poor you, I guess we feel for you that there will be certainly long-term impacts because of the COVID and the delays it's creating in the law system. Thank you, appreciate that.
Thank you.
Jeff, how about you? How has 3D Forensics been responding and reacting during these uncertain times?
Oh, thanks, Jeanette. Yeah, it's interesting, and I love that phrase that Katie just used. This comfort and discomfort. That I think speaks to a lot of the challenge that we've all faced on this one. And certainly, I'm the 3 for 3 with the vacation years when this started going down in March, and the lockdowns were cascading around the globe. I was away as well, and on some level, it was hard to be away, being a leader of the firm and wanting to be able to help manage things. But also, it was great, as Katie and Mike said. It's nice to have a little bit of energy. Fill up the tank a little bit before you wade into these sorts of things. That said, we had the same kind of reaction as everyone else did here at 3D Forensics. What the heck is going on with this? How do we figure out what to do? Looking to get information really, and trying to build our own understanding. And so I was really lucky in that regard that, 3D Forensics is fundamentally, and I've got our mission sort of statement there. We're a company that works on truth, and we're in the business of truth as experts, supporting legal and insurance matters. And other risk management matters. Understanding what exactly are the facts of a situation is central to everything that we do. And this was no different. So, I'm really proud, frankly, that as a firm, we've got kind of a family feel with 60 or so experts across Canada. So we've got some of the big company tools that Mike talked about, but also have, the interrelationships and the trust amongst one another, and that strong culture that's been so helpful for us. We have had our disruptions like many other firms, but generally speaking, we've been pretty good, pretty resilient. Our office, I'm in the office today, is open, though we certainly don't have the uptake in the number of staff coming to the office for all sorts of great reasons. And we don't expect to see that picking up anytime soon. Certainly, downtown Toronto is a bit of a ghost town right now. And frankly, that's great in some respects. There are no lineups at the Tim Hortons, and you can kind of get about your day without a crush of people. So that's lovely. But by and large, looking at how we've managed things, I look at relying on our internal systems, working out the way that we have tools available to us and learning from those things. And I was talking with my wife about this, and we've been using the phrase, there's a scene in the movie The Princess Bride where one of the actors says, if only we had a wheelbarrow. And the other guy says, oh, we have a wheelbarrow. It's right over here. Why didn't you list that amongst our assets? So for us, being mindful of our assets and what kind of skills we have, what kind of tools we have. And the biggest one of that really is our culture, but all sorts of other things. So we're lucky in that we do a lot of work in the environmental health and safety, biohazard space. We have lots of people who are experts in that space who can, talk about airborne hazards, PPE, development of safe work practices. We've got great technology backbone. Again, because we practice across Canada, most of our experts have laptops, cell phones. They know how to use those things. We have a great VPN. Our IT team was fantastic and able to manage those things while still being compliant with all of the master service agreements and security requirements that our clients require of us, given that we handle such sensitive information. It's been really, really good. And so the challenge for us has been one of culture and one of needing to listen, needing to understand what it is that our clients need, what they're looking for, and relying really on that strong culture that we have and that focus on our clients and focus on being problem solvers as clients. So, the biggest areas of concern that we've got going forward, is trying to figure out what are our policies, what are our procedures, making sure that stuff is communicated clearly. And again, as I say, and to reiterate, listening has been critical for us, and looking at the marketplace, looking at our own team, what are the needs of our people, our groups, our partners in the industry, which are quite significant, working with the Mikes and the Katies of the world, as well as, the large insurance firms who have their own challenges, right? We have to work together lockstep and be on the same team. So by and large, I would echo completely what Katie said, which is what we do hasn't really changed. It's how we do it, the context of that, and pivoting in that has been a big part of it. So looking forward, as we look at our externally, looking outwards at our clients and how do we advise them? Again, as I say, the key starting point for us has been listening. What is it that people need? And we have a very diverse range of clients, working with the IAs in the world, legal, insurance, brokers, risk and property management firms, construction, and also other competing technical experts that we have to work together with. All of those things need to work together. And so our existing products and services really aren't changed. It's how we deliver them that has been, for the most part, different. And, a great example is how we work with other experts to do joint examinations, right? So it doesn't help if only one expert out of 6 is able to look at a piece of equipment to help make a judgment and work together to come to a solution. We all need to be working together. And in some cases that requires a combination of people who are unwilling or unable to travel, who don't feel safe, making sure that there's PPE available. So we did a whole audit of our office, our lab facilities, and our policies and procedures to work around that, so we could continue to deliver our existing products and services in a safe way and mindfully of the context that we're all working together in. The other thing that was important for us was, was being able to deliver the existing services that we did in a slightly different ways, but also using more and more of the tools that we, as Katie said, the pace of change has accelerated for us. Right? Much like the court system, it's now, okay, if our clients are now familiar with and are comfortable using tools like Zoom, like MS Teams, SharePoint file sharing services, we can do a better job more efficiently. Certainly that's great for all of our clients, where we want to be mindful of their resources and their resource constrained time. We don't want the cost of everything that we do to go crazy. We'd rather do it more efficiently and quicker. So these remote site visits, Mike mentioned a lot of these things. How do we get on site, do the investigations that we want to do? We were very much present in Fort McMurray during those flood response times. How do we balance the needs for safe travel, making sure people have the right equipment, they're feeling comfortable, they're able to do their work and collaborate with others on the scene, in the restoration industry, but also get our services out there quickly. We had to develop a lot of procedures, and luckily we're able to rely on those assets, those that we had, the people that we had, those who are very, expert focused, science focused with, biohazards, relying on and understanding the ability of our PPE, of our policies, of those various tools to work effectively in a COVID context, gave us a lot of comfort, gave us a lot of confidence, and we've been able to continue to support our clients quickly, even within this context. So that said, we've got, I think, most exciting for me, and I would like to share 2 kind of new types of services that we've evolved with, which grow organically from what we do. And the first one of those is a risk management focus on COVID impacted facilities. And this is kind of born out of, some clients reaching out to us, again, listening to what their needs were, and having lots of concerns around a lack of guidance from public regulators, public health, Ministry of Labor, those kinds of entities about the actual day-to-day. What does it mean if I'm a dentist? How do I open my dentist shop within the context of all these rules and regulations? So looking at how do we give some tangible advice, some fact-based, science-based advisory services for those who have yet to have a COVID impact in their facility, but are looking to do the right things. I mean, anybody who is an owner or an operator has a duty under health and safety regulations to make every reasonable precaution to make the workplace safe for their workers, for visitors, for the public. What does that mean? And it needs to be very specific to each site. So we did a lot of work of that internally to our own office, our own operations, but are also able to share that with others. Moreover, we were also pulled in on a number of instances where there had been a known positive COVID case in a facility, and looking to manage that risk, speak to safety concerns, and then be able to open with confidence as part of a broader commercial operation, both for those who are deemed as essential services or just regular businesses that are open in this phase 2, phase 3, depending on where you're at. We want the economy to run. People want to work. People need services. They want to get out and do things, right? So how do we do that in a responsible way, in a proper way? So we've developed, on the backbone of sort of our existing biohazard, designated substances type response work, biohazardous COVID related work, disinfection work, and being able to provide some real guidance to contractors, owners, operators, insurers about how to deal with these situations in a scientific based way. The other part that we are active in, and we see a lot of activity, is related to the construction industry. And that has been an industry that is really an engine, certainly in Toronto. There's numbers of cranes out there. It's a huge industry, and it is a big part of the insurance industry. When there is a loss, to put Humpty Dumpty back together again, that's a critical thing. And there's a time part to that, which is important. People want to get back to their lives, and it's one extra stress. As Mike said, if you've got a loss, you have a hail damage to your roof isn't working, you're already stressed out enough as it is with COVID. Now we're adding these additional things. The sooner that we can help get things back together, the better. And certainly, so we do see a lot of advisory work that we've been doing with our contractor partners in the restoration industry about how to safely do their work, right? Helping them develop safe practices, making sure that the cleaning techniques that they're using are actually effective, helping them sort of as an extension of this property management thing, helping contractors, you know, are our tools clean? Do we have enough, you know, the gear that we need, the wipes, the cleaning products, are they effective? Can we validate that? How do we prove to our clients that we're doing a good job? And so we're able to support that through our services. And then the other one is on construction claims. And that's an area that certainly Katie is going to lose her mind in, I'm sure, in the coming months. Construction has been impacted certainly in a number of ways. And we do see escalation of costs and schedule in a construction context as a consequence of COVID. So the obvious one being, okay, if at an 8-hour or a 10-hour day, now I have 2 hours of that spent climbing stairs when I used to be able to take an elevator, or waiting for my turn on the elevator, or having greater, you know, cleaning requirements when I come to the area, health checks, those kinds of things. There's equipment costs around doing construction, doing it safely, and there's time costs around that, and delays associated with that. And inevitably, where there's cost and where there's schedule change, there are going to be legal disputes around that, and we are certainly going to see more and more of that. I'm already involved with a few cases where owners are managing claim issues and are looking for some help around how to manage that. Certainly, we see questions around, you know, strategies to manage that, and also looking ahead, because we are far from over with this, how to bake in certain provisions and expectations around running construction projects properly. So these are all areas that we work on. So looking ahead, you know, we're very optimistic about where things will go. And because we've got this, as I say, we have the wheelbarrow. We've got some great assets in-house that we continue to rely on. And the strongest part of that, frankly, to my mind, is our company culture. Mike said the same thing. You know, it's really a touchstone for us in terms of looking at what does it mean to work for somebody, and what does that mean about how I'm valued. And communicating that clearly to our internal team is critical, but also to our clients, and working lockstep with them, making sure that we're listening. Our ultimate goal, frankly, you know, keep our own team safe, keep them engaged, keep them happy, give them the tools to do so, because that will help us then do the same with our clients, with our partners, and do so safely as a community.
Thank you very much, Jeff. It's great to know that we have thinkers and innovators like yourselves out there to support our businesses, and not only our businesses, but the entire economy. So thank you very much. So again, thank you, Mike, Katie, and Jeff, for this great session. It was a very interesting discussion. And again, thank you for sharing. And we will be open to taking any questions from the audience now. Good morning or good afternoon. It's 1 o'clock. I'm not seeing any questions coming in so far, but I do have a question for Katie. Katie, you mentioned in your slides a growth mindset, but in this pandemic situation, and how do you encourage growth in such circumstances?
Such a good question, Jeanette. Thank you. So Tina knows that before I came to law, I was in theater, and I used to do a lot of comedy work and improv. And one of the rules of improv is that you never block an idea. So if you're on stage and you're with someone else, and even if the idea isn't very good, you don't block it, you roll with it. And hopefully it turns into something more interesting and fun, both for you as the performer, but also for the audience, which is, of course, the actor's client. And I think that training, Jeanette, honestly influenced how I look at things on now, you know, years and years later, because I've been doing this law thing for 2 decades now. Although I realized with this recording that I still sound like I'm about 12 or 13 years old, so I might work on that. I might start smoking just to get through these video recordings. But the growth mindset, Jeanette, for me is there is a way to do it. And so if I am in a resistance mode and I think that it's going to be too hard or too expensive or it's out of my wheelhouse, then I won't be able to grow through it. And whether it's mapping out a solution or looking through a root cause analysis of how we even got to this point in order to figure out where we want to go forward, all of those things to me are about saying yes instead of no. And so if I start with yes and I start saying out loud, I am so tremendously uncomfortable with this, then I get the resistance piece over and done with right away. And then what I do, and if Jason Frost, my partner, were listening to this, he would laugh, but I share this with so many people. I get in the canoe. I turn the canoe downstream, not upstream. I go downstream. I take my paddle out of the water and I let the stream help me along. And for me, so saying yes and also figuring out where I'm being resistant just because I haven't been there before. And as a lawyer, you know, we're bossy and we love to be experts at what we do and feel like the technicians. And right now in COVID, we just have to accept that part of our growth is being in an uncomfortable space. And if I can do that by saying yes, by remembering that my client is there, and by saying yes, I'll be able to do better and maybe be a little bit fun in the process. And also that resistance is my enemy. My growth mindset, I think, will help both my practice, the delivery to my client, but also help my community and the people that I'm working with, whether within my firm or today with, you know, all of us participating and learning together today.
Thank you, Katie. I have two questions that came on to where one is, how do you see insurers doing site inspections? So Michael, Jeff?
Well, sorry, Jeff, you want to go ahead? Okay. So at the start, as I was suggesting earlier, Jeanette, when COVID first hit, there was really an uncomfortable feeling out there as to exactly how to approach a site visit. Insurers didn't want adjusters going out to houses and speaking directly with their insureds, putting them at threat. So we very quickly, and other companies as well, turned to technology and looked at the remote services, allowing us to take a look at somebody's house if it was a property loss or an auto loss, and take a look at that property firsthand and see exactly what the damages were. They really did want a lot more being done from the desktop. Now that applied to most personal line claims, but on the commercial side of things never really changed. There was still that need to go out and take a look at something firsthand, especially when you're talking significant dollars, but you would always be prepared. There was a risk involved, but it wasn't a personal risk as you would in a homeowner's situation. At a commercial site, you're going to be prepared. You can have the proper equipment. The insureds know and expect you to be on site. So that aspect on the commercial side didn't really change. Definitely on the personal side, it changed significantly for the first couple of months till people got a little bit more comfortable with face-to-face meetings with masks and the appropriate safety gear, and it worked out. But yes, you're right. For the first couple of months, it was a very different ballgame.
Yeah, I would echo that. Yeah, exactly. I think the same comments I would make. I mean, I think for us, you know, the way that we've approached it has been that if our clients ask us to get to site, and I like Katie's line there, let's say yes and maybe have a moment of discomfort, but aim the canoe downstream and figure it out. And it sort of, you know, speaks to the other question that's on the board there. I mean, I think going forward is trying to find more ways and more creative ways to do our work. And in this context now, it's just treating every site visit like a little bit more like a hazardous one, right? Which is, it sounds a little mean, but I mean, everybody is in that same boat together, right? We want to protect people from ourselves as much as protecting ourselves from them and just the world around us. So, you know, that's where for our side, it was making sure we had the right PPE, people had the right training, know how to use it, understanding, even just taking your mask on and off, right? Making sure to keep your hands clean, avoid touching your face. These are very natural things that you kind of had to train out of to some extent. But for the most part, we've been able to continue doing the work that we do in the field pretty regularly. And we've also had a lot of clients who are more comfortable now with the virtual tools. They'll walk around with their cell phone. Okay, and we just have it on the earpiece. Okay, can you look up a little bit? And they just tilt the thing. And so you can do some kind of clever remote sort of site visits. You know, I mean, we're a step away from putting on the VR headset at one point, but I mean, we're getting there, right? And I think to Katie's point, and you know, we're evolving those tools and we're kind of breaking through those perceived barriers that in a lot of cases are pretty easy to smash through once you just commit to making that change. So I think it's pretty exciting.
Thank you. Another question. The first group was asked about permanent changes resulting from the pandemic. What permanent, oh, sorry about that. What permanent changes can we expect in the claims process resulting from the pandemic? I'm sorry, Michael,
Well,
or Jeff?
Who wants to jump in? I mean, I think for my
who wants to jump in first?
I'll start really quickly, but I would welcome, you know, Mike. I think Mike probably has the closest touch to that process. I mean, for my part, yeah, go ahead. Yeah, maybe
no, sorry, Jeff. So definitely on the Jeanette, on the technology side of things, we've realized, do you really need to meet as a group as often as we do?
Mm-hmm.
Go out and see clients or going out and seeing colleagues in Vancouver or Halifax. Do we need to do that? Can it be done remotely? Is there a better way of doing things? And definitely on the technology side of things, with the new technologies, we've realized maybe we don't. Do we need to go out to people's houses as often as we do? Maybe we don't. Can more claims be handled by desktop? We're finding that. It's also opened up our eyes into other services that are available on accounting services and things of that nature. Is there a better way of building a mousetrap? And we're finding that we're forced to find those solutions now, and we are finding those solutions. We can do things a lot more efficiently and remotely, and I think that's probably the biggest change that we're finding.
Yeah, I'll really quickly add to that, Katie, and then maybe you can jump in sort of like looking at the cycle of these things. I mean, I think from a claims perspective, certainly I would echo Mike's comment. I think, you know, the development of new technologies and tools to allow even sort of self-diagnosis type things, right? Like a homeowner could take the photos and maybe there's a collaborative tool that uploads right into, say, an insurer or to an expert's, you know, their shared drive or whatever, and then we can have a bit more collaboration without actually ever getting face-to-face. I think that's certainly one thing. And certainly in our interactions with the legal community, maybe Katie, I'll flip it to you on this, is that, you know, talking about that greater sharing of electronic things rather than the giant box of documents showing up on our desk and having to scan those or review them. Well, now we can use an electronic file. We can start using AI-enabled search recognition tools to kind of find the exact stuff that we're looking for, do our jobs a little quicker, a little more efficiently if you trust the technology tools. And that's no small thing, right? And then maybe there are a generation of training elements to that, which would be curious to see how that evolves over time.
Jeanette, on that, I think from a claims process, once the claim becomes in dispute, some significant changes are, I don't think the courts are ever going to go back to requiring as much in-person engagement. And I think that's a good thing. It's going to build efficiencies for a very strapped system. And that's good for everyone. I hope that it will be balanced with some health and wellness awareness, because it also means that you could be in two different courts, frankly, on the same day, because you're doing it virtually, but you still need to prepare. You still need to be focused and present, and you still need to be able to report and respond and deal with the outcome of those events. So there is some balancing that I think will have to happen from it. From a technology perspective, for sure, I agree with Jeff. You know, learning those new skills with technology, it will take time for some people. and it will feel very expensive for some organizations, and for others, they will, grab you by the hand and encourage you because it actually doesn't take very long to get into a higher tech, less paper environment, and to feel the efficiencies that come from that and the reward, the return on that investment. So I think we'll continue to see those commitments.
Thank you, Katie. Yeah, sorry. Go ahead,
no,
Mike.
I was just, to Katie's point there, we've actually scheduled virtual discoveries, Katie. I've never seen that before, never been part of virtual discoveries. It's going to be an interesting process, and whether or not that's going to be a permanent change going forward, it will be interesting.
All right, well, we have to wrap up. Thank you guys for sticking around for the Q&A sessions. I really appreciate that. And well, take care. Have a good rest of the day. And thank you. And please do stay on board for the How Are We Doing Us Risk Managers and Clients session.
Thanks, Jeanette.
Thank you.
Thank you. Bye-bye.
Bye.
Thanks so much, Jeanette. We're going to go on to right into our third and final session then of the day. Over to you, James.
Hey guys, I think it's my turn. I am Tina Gardner, Risk Manager for York Region, and I'm moderating session 3. I have my tea. This is a personal session. This is How Are We Doing? So grab your coffee and let's have a chat. Have you done a check-in? Do you know how you're doing? Most of you out there, if you know me, you know that I'm a bit of an open book and might even tend to overshare just a smidge. So I'm going to do a little personal check-in on me. How am I doing? It's a good question. I live north of Toronto, so the numbers up here are great. I'm working from home, so I got a great commute. All the members of my family are still working, so I know that's a real blessing and I don't take that for granted. And I don't know anyone who has COVID. So again, another blessing. In the other column, the column of what's not so great, I worry about my team that's working remotely. Some of them live alone. Some of them don't like to work remotely. So keeping them engaged and healthy has become a bit of a challenge. I have one daughter who's studying public health, of all things, Masters of Public Health in Toronto right now. And I have another daughter who lives in Halifax. So even though they're adults, they're 28 and 25, they're not with me, so I worry about them. Some of you may know that at the start of COVID, in mid-March, just as things were shutting down, I lost my father to a broken hip. While we were allowed to be with him, and that is a privilege denied to many during COVID, and I don't take that for granted, I have learned how valuable the traditions we have around death are for helping the healing grieve. We weren't able to do any kind of service for my dad until mid-August, when my daughter from Halifax could come home. I've been amazed by some of the stories that I hear about the resiliency and the giving of people out there. I have a friend who runs a martial arts dojo, so of course he was shut down, and his wife also was out of work because she works in the hospitality industry, and his team, his tribe as he calls them at his gym, it's a physical thing, but it's also hearts and minds. So a lot of them depend on him to keep them going, and he knows he has that role with them. So he would go and do driveway visits with them just to stay connected. And the two of them, him and his wife, rather than sit at home and clean out closets and binge watch television shows, they volunteered in the community, and they drove food around and water around and did all kinds of community work. And so it was really nice to see his team pay him back. The ones who were still working continued to pay their monthly fees to the gym, even though they weren't getting classes, because they really valued what he brought to them as a coach. And they wanted the gym to survive, and they wanted him to be okay. So I felt that was pretty heartwarming. So everyone has layers of worries and blessings during this pandemic, and there's many moments of, wow, that's great. And there's a few moments of WTF. But gaining some understanding about the pandemic situation, the capacity for stress, and the human nature that comes into play with all of this might help us weather this storm with a bit more positivity, empathy, and resilience. So today we have two wonderful professionals to help us with this journey, Dr. Teresa Bartlett and Dr. Adam Campbell. So I'm going to read just this little snippet. I know you got their bios in advance, but I'm just going to read a little snippet from their bios just to set the stage. Dr. Bartlett is a senior medical officer for Sedgwick, advising in matters affecting design and delivery of medical management services for the company's claim clients. Her background in family medicine led to a business career with a large automotive manufacturer. She's had many opportunities to design programs in wellness, fitness, and workers' comp, for which she's won numerous awards. In 2012, she won a business insurance award. She was a recipient of one of the Women to Watch, and she was later appointed to the Women to Watch Foundation board. She also volunteers as a crisis counselor for the Crisis Text Line. Dr. Campbell is the practice lead for the Human Factors Group at 30 Forensics Engineering. He has a PhD in neuromechanics and has been qualified on numerous occasions as an expert in human factors within the Ontario courts. His research program focuses on the study of human behavior in emergency situations and the causes of performance failure when confronted with threats of harm. So you see we're in excellent hands to check in on how we're doing. We thank you both for being with us today and look forward to the wisdom that you're about to impart to help us along this pathway that I think still has a few tricky bends to come. So I will turn this over to Dr. Bartlett first. Teresa, the mic is yours.
Thank you, Tina. That was really a sobering kind of a start. Thank you for that. So I'll talk a little bit about the unintended consequences of COVID-19, of which there are many and far too many for us to cover in this session. Just give you a sense of what has happened and what the consequences are. The first thing I wanted to mention that is so striking to me, many of you would have read the Dr. Lorna Breen story. She was an emergency room physician at New York Presbyterian Hospital, the medical director. She was an avid hiker in her 40s, or yes, in her 40s. Peak of health, was a runner, a climber. She had many, many friends, a great social network, fantastic family. Her dad was a doctor, a retired physician now. And she kept a diary during this time of COVID when New York was under siege. And she described the despair that she felt in the early days as much worse than the 9/11 attacks. She felt as if it were completely uncontrollable to have people die in front of her while she's holding their hand and there's no family around. And a little bit of what Tina talked about, you know, the inability to grieve and to have that human connection, which is so important. She tested positive the week of March 22nd, was off for the required 10 days, and went right back to work, was not very healthy, was not feeling 100%, but she knew she was desperately needed on the front lines, and went right back to work, and she indeed died by suicide on April 26th. So many of her family tried reaching out, tried to prop her up, but she couldn't be with them. It was more like a text or a phone call once in a while. And it was really the thing, I think, that sparked this interest in the fact that this is more than a pandemic. It's more than a virus that impacts your lungs and your heart and your body, but it has such a huge mental component. And I think it's really important for us to remember Dr. Breen and the great work that she did and how impactful this was on her that caused her to die by suicide. Here are some general statistics on mental health. We know that about 4,000 people in Canada die each year by suicide. We know that adults with mental health illness also have a substance use disorder. And we know that 70% of the people that have a mental health problem also have it since childhood or adolescence. So that's 1 in 5 adults in Canada experience a mental illness in any given year. And about 50% of adults in Canada have had a mental illness by the age of 40. Those are staggering numbers. That's a lot of the population. The economic burden placed on mental illness is about $51 billion to Canada. And 10% of that burden is mental health. And 7% of it, only 7% of it falls within the healthcare arena. It is the leading cause of disability, and adults with serious mental illness average that they shorten their lifespan by 10 to 20 years. And unfortunately, wait times for counseling can be 6 months to 1 year in certain segments. So it's a very important issue. We're looking for some pandemic factors to share with you. And one such area that we found was a Kaiser Foundation poll where 50% of Americans felt as if this virus was harming their mental health. We did see a rise in alcohol consumption between 40 and 60% in the beginning of the pandemic, and that alcohol consumption rate continues. There's been about 1,000% increase in accessing on the hotline. So the phone calls that people are feeling despair, or things like the crisis text line where I am a volunteer each week. So we know that people are reaching out. And we have seen a 65% increase in online services such as Talkspace, which is a great way to connect with a counselor outside of your healthcare arena. So we know that the mental health needs have increased. You can follow it geographically. As the rise in COVID goes up, so does the rise in mental health needs. And the data modeling of this pandemic worldwide is showing that it is much more prevalent and impactful on mental health than any natural disaster, economic downturn, or any terrorist attack that we've experienced in the world. And we know that anxiety and depression are increasing, and they're certainly very high among healthcare workers, first responders, and educators. There's so many first responders and people that are on the front line in the grocery stores and banks and things that we need them to be there, and they have been there for us. And it's just difficult for them to put themselves out there because everybody has a family, everybody has something that they're trying to accomplish in their life. And so it's important for us to recognize those folks. So as we look at the unintended consequences, what do we have? We have a lot of people working from home. We have people that are very isolated. Now, some of it is by design because they're ill and they have COVID and they need to isolate so that they don't become part of the problem and spread the virus. We see that with the shutdowns of various geo areas, that there are big relationship challenges. If you already didn't get along with your spouse that well, you were just on the edge, this made it abundantly worse that you were sort of in isolation with that family member. So many of us are balancing family and jobs simultaneously. And now that the fall has come, it's not only family and job, but it's also homeschooling. And, you know, some people are working with a laptop on their lap, sitting on the couch, and they don't have the proper workspace to do their job. And that now they're trying to help their child with homeschooling. It's a huge issue for people, and I'm not sure that we're appreciating it as much as we could be. And even Tina mentioned this, that there are loved ones that we've lost and we haven't been able to have a memorial or a funeral and to properly grieve for them, and the importance of that in our society when someone is lost. I know I personally lost an uncle to COVID, and we got very creative and had to do a Zoom memorial service, and we all came together from all different states and grieved and shared stories and celebrated his life. There are people that live in fear of job loss. There are people who've lost their jobs, and it's a real consequence. And the financial difficulties that have ensued from that are real, and they're dealing with it. And so what's available in the workplace for someone? Well, there are wellness programs that workplaces have had. Not sure they were quite oriented towards so much remote work. And then you have both the government provided and the private healthcare benefit programs that might afford you something that would help you get through these tough times. But let's not forget that the work environment is generally a very good cultivating space. And it's a great place for people to be, to have that social engagement and interacting with each other. And now that is not there at the moment. It's all remote. So what are we left with? We're left with a lot of Zoom calls and WebExes and webinars, and maybe the check-in from your supervisor and your team members. Maybe there's some remote programs you're doing, and even telehealth has really erupted in a big way during this time, where maybe you can access care. If it's difficult in the place that you live, maybe you can access care through telehealth. And on the flip side of that, now you're home. So maybe you're lacking those organizational skills that you might have had at work when your colleagues would have said, hey, do you want to get some lunch? And you would go off together and get some lunch and sit in the lunchroom and enjoy each other's companies and catch up on each other's lives. Now you're eating whenever and whatever you want because you're home and you're really close to the refrigerator and the pantry. So the COVID-15, it's a real thing. People have not been able to go to the gym. They're working long hours. They're sitting for long periods of time. They're not, maybe they don't have a big space in their home to walk around, and they're not getting out of that house and that office. And the multitasking, it really weighs heavy on your brain to be doing multiple things. So such as caring for an infant or a 5-year-old or a 10-year-old and helping them with school while you're trying to do your own work. And then there's the preventative care. Maybe you normally go for a physical every year. Maybe you have to get health screenings, and this year you might not feel as though it's worth it. You don't want to take the risk. And what will be the consequences of that if you choose not to take the risk? So I think it's a lot for us to think about as we move through this. There's a lot of potential in this as well, and opportunity for employers and government and social agencies to help people through this. There are now programs that are emerging and have been around for a while, but they're emerging in resilience intervention and trying to help people feel resilient and how to look at the glass as being half full all the time, how to exhibit learned optimism and practice optimism instead of pessimism. It's so hard this year, right? Everything is difficult. And I've heard so many people say, let's just get this year over with. And it's tough. The social engagement, so many people are missing being socially engaged with their friends and their family and their parents maybe. I've met several people recently who haven't seen their parents in 3 to 6 months because of COVID, and they feel that it's not safe and they don't want to put them at risk. We definitely know that there is a strong correlation between physical health, behavioral health, and top performance. And it's difficult right now because we really don't have all of the aspects. Maybe we would go to a gym every day. And, you know, as Tina talked about, it's hard. A lot of those gyms are closed or they're down because they're not safe. And we all miss that physical health aspect of it. And so it's really something that is weighing on us. And then there have been a lot of studies and books that talk about our chronobiology. And the chronobiology is really your all of your rhythms in your body, the circadian rhythm, your age biology. So are you your state of age? Are you older or younger because of your health status? And all of these are programs that have great potential to help us if we can just get that out in a meaningful way to our colleagues. And also, I think it's really important that as we talk to our colleagues and focus on what is going on with them, that we think about the 4 dimensions of energy management. We all know that what the stress indicators are, right? We know that relationships can be stressful, work demands can be stressful, culture can be stressful. If it's something, your company may have a brand new culture now that you're all working from home. If you're lucky enough to have a job, and career and development of your career and your goals, all of that can be stressful and indicators of stress. And I think it's important that we think about what are the 4 dimensions of energy, right? You have the physical, your thoughts and your emotions, your mental, and your spiritual. Even the spiritual energy, if you are a church-going person and you have a strong church community that you belong to, very important that you have access to that. And what have we not have access to? Those areas have been closed down for long periods of time during this pandemic. And so it's really important for us to think about that and to think about people and are they okay in all of these dimensions of energy? And if they're not, how can we help them? How can we help them manage the energy, and how can we help them rewire that script of trying to have a more positive outlook? Another big thing that is happening that I just want you all to think about is that there is a strong mental health component with the way that COVID spreads. If you consider it, so I just had a scenario that came across my desk today where a young mom was in her neighbor's backyard at a barbecue on Saturday, And they were all gathered together on lawn chairs, trying to socially distance, but not having masks on. And sure enough, the dad next door had COVID and he didn't know it. He came down with all the symptoms on Sunday. So now all of them are sick. All of the kids, all of the families that gathered in this background. So, you know, if you're that dad, you didn't know you had it, and now you have to tell everyone. So there's this guilt and shame that you feel. There's anxiety. Now you've caused the mom and maybe the, you know, the teenage people to lose work and lose financial income. Maybe they had to cancel a wedding that was coming up in their family the next week because now they all have this exposure. And maybe even, you know, somebody in the mix dies. There's this great guilt that an individual feels through no fault of their own. They got the virus, and there was a lot of shame and anxiety, and just how many people did I give it to, and why, and how long will it impact them? And you just feel so badly. And I don't think we talk about that enough on the mental health implications of COVID. And with that, you know, there's just a lot to consider here. And now the conversation will continue with Adam, who will walk you through his slides.
Thank you very much, Dr. Bartlett, and for Tina for your very warm introduction, and everyone at Sedgwick and ORIMS for putting this together. So I think where I'm going to pick up on is, you know, just to speak quickly about maybe the difference between what Dr. Bartlett and I are going to be speaking about. And I think, you know, what Dr. Bartlett, you know, very nicely summarized is, you know, how this is impacting our health, how the COVID experience, or how our physical and mental health has been, you know, either directly or indirectly influenced by our experience through the pandemic. What I hope to address in the next few minutes here is sort of how that experience is affecting our behavior and the things that we are seeing in the world today. When you turn on the TV, there are things that we're seeing people doing these days that, you know, we wouldn't expect people to be doing, you know, beyond a pandemic. And somehow, you know, over the course of this duration of time that we've all been under this umbrella together, you know, it almost is becoming, you know, we call it the new normal. It's a very cliche thing to say, but we're seeing things that of people that are happening more frequently and almost, you know, in a bizarre way, you know, or, you know, how this experience is affecting people's decision making. And so that's where I want to live with this presentation, because, you know, for the risk management community in particular, you know, it's the behavior of people that matter. It's how they're going to respond to the health crisis, to the wellness crisis, to the information crisis. How are people going to behave in that environment? Because the answer to that question has direct implications on how we as business owners, business managers, directors of regions and companies, how we will be able to or not be able to plan for the next wave or the next big event that involves many people, many cities, many countries, many continents. So I think one thing that, you know, if you imagine pre-pandemic times, right, you know, in the utopia that it used to be, you know, what we used to see in, you know, public spaces more often than not was, you know, a fairly well organized system. You know, societies, you know, in North America and across the world, you know, not painting with too broad of a brush there, but, you know, self-organization and, you know, appropriateness of behavior, if you will, is something that is very tightly controlled. Some with a heavy hand, some with, you know, the reason and the rationality, as I'm calling it here, of the people within a particular environment or a particular society. But, you know, there are examples in our not too distant past. You only have to look back to our most recent, you know, mass marketing, you know, Black Friday shopping blitz, where we see elements of societal behavior rise sort of beyond the surface and boil over into things that we think are bananas. And we see pictures like this, we see people doing things that seem to be irrational. And what does it take to cause that level of irrationality, that type of chaotic, highly variable and damaging, harmful behaviors? You know, in some situations, it's just 50% off a TV. You know, these things, the things that control people's behavior, whether as individuals or as members of groups, societies, families, companies, are very tightly regulated in the good times. And so, you know, it doesn't take much to push us over the edge. And what we're seeing these days, I think, are, you know, prime examples of how our experience is affecting our decision making. I can think of no better image to reflect that. You know, there are things that people are doing now, you know, in preparing for what they think might be the case of their future in the near future, that has them doing things that, you know, seem unnecessary, but so many people are doing it. That it seems normal, it seems what you should be doing, whether it's buying toilet paper or otherwise. You know, we don't need toilet paper to survive, but yet somehow the lineups around the corner full of people before mandates to wear masks. People were putting themselves in harm's way to buy toilet paper. That is not rational thinking. That is not evidence of a group of people sitting back and quietly contemplating the realities of the situation that they are in, and what they ought to be doing to best protect themselves and their families. And one of the reasons why this happens, in particular in a pandemic, is that when people are fearful, when they are scared, when they are anxious, emotions tend to be the North Star in what guides behavior as opposed to rationality. And there's good reason for that, especially in a pandemic where the time that you spend contemplating something could be harmful time that you aren't protecting yourself or your families or your companies, time that you aren't doing the necessary work to distance yourself from potential threats. And so emotions, you know, we can think of them very generally, that gut feeling, but, you know, fear, anxiety, sadness, these things allow people to react very quickly in times where time is of the essence. You know, we don't have time in a pandemic to sit and contemplate and to share ideas amongst groups to see, well, what are you thinking? What am I thinking? Is this making sense? What should you do? What should I be doing? You know, those sort of thoughtful conversations take the necessary time that people believe could be better spent getting away and doing the things to protect themselves and their families. So it is no surprise that we're seeing these behaviors, these types of herd mentality behaviors, if you will, of, you know, a collection of people doing things that objectively don't make a lot of sense. But you can understand them from the perspective of, you know, we have a society and, you know, beyond of people responding to something they feel is harmful to them one way or the other. And so it's this type of thing that we are experiencing and these types of behaviors that we expect. And unfortunately, it takes a crisis for these parts of our personalities and our, you know, of our ethical fabric, our moral fabric to rise to the surface. You know, in the good old days of, you know, early 2020, when things are great, you know, these parts of our being don't often show up. They don't often present themselves in the very public way that they are now. And so, you know, think back to yourself, you know, into your family, into your organizations, you know, in January and February of this year even. You know, when you looked at yourself in the mirror, you know, how would you have guessed, I should say, that you would react to a worldwide health crisis? How would you have believed you would have responded? And is what you thought you were who you are? And it's in that question with yourself, and I think with, you know, looking outward to how you believe people have observed your behavior is an important moment of self-reflection. And it's one that I'm going to, you know, come back to as I think an important next step for all of us. You know, these days, you know, how we perceive the world is very different than we perhaps thought the world could be not that long ago. And as risk managers in the risk management community, you know, you have the glorious job of worrying about all things that could possibly happen. You know, as someone from the outside looking in, that's what I see. When I look at Tina, I see somebody who gets paid to worry about everybody and everything that she comes into contact with, to try to find ways to figure out how they would not experience harm when the next bad thing happens. You know, so imagine, you know, the sort of classic approach that someone like Tina would go through in sort of the preparation, you know, before a catastrophic event takes place, how to be prepared for it, right? You think about, imagine, you know, Tina is thinking about, you know, what would be the procedure if the, you know, York Region's headquarters were to catch on fire. What would she do to help mitigate that loss? You would imagine that region and that Tina's leadership trying to think about, you know, who we need to be in touch with, who's the first person we need to call to help mitigate this harm, who's going to turn, you know, if the sprinklers aren't coming on, who knows how to fix them or turn them on manually, who's going to call the fire department, who's going to ensure that no one's in the building, and who's going to ensure that if someone is in the building, that the right people know about it to best create a scenario where that person is saved or not experiencing any harm. When you think about these examples, it can be in a fire example, it could be in a cyber event. People are at the center of that strategy. And we rely on people to think rationally and to help others in overcoming a state of potential harm or potential threat. What's different about a pandemic is that it's not just York Region's buildings on fire, is that everyone's house is on fire at the same time. And so when we are expecting people to react and behave in a way that helps us, is not thinking about how their world is on fire at the very same time. I think to Dr. Bartlett's point about having that level of empathy and realizing that everyone else is going through something at the same time, but perhaps in a different way, which may prevent them from being the best version of themselves for you at the moment that you best and most need them. So I think that is, if there's nothing else, the first take-home point here is that we need to reflect on the situations that our people, our employees, our staff, and our companies and our families and so forth, how they are experiencing what is going on right now, because that will define how our ability to respond to the next wave is determined. You know, and keeping on the risk manager's, job description, you can imagine a scenario where, you know, in the plan to avoid a harm or avoid a loss or a failure, on itself gets thrown out the door. And it's when we plan to not have an event, and when that event happens that you can't stop, what are you left with? You know, this is a classic quote, and, you know, who would have thought that Mike Tyson would have brought some utility to a presentation like this? But, you know, everyone's got a plan till they get punched in the mouth, right? How much time you want to spend desktoping, preparing for something, and in the hopes of avoiding that incident. As soon as that happens and that uppercut sneaks through your attempts to mitigate, what are you left with, right? When you don't have a plan for when that harm hits, you're left in a tailspin. It sends you into a place of, again, responding with emotion instead of logic and reason, because all of that planning takes time in and uses your logic and reason. When you're left to react, all you have left is emotion, because you have no time left to contemplate things anymore. So really, at the end of the day, it comes down to two questions that you need to ask yourself, you need to ask of yourself and those that you work with. Were you ready? Were you ready for this one? In all the various hats that you wear on a daily basis, were you ready for what was about to happen to you, when, as unexpected as it was? And were your people ready to respond when you needed them to mitigate whatever loss, whatever that looks like for you and your organization or your family, your society? Were they ready? And why? Why or why not? Those are the questions that you need to ask yourself. And there's no place here to really go through every example of what the answers and the scenarios will look like. But I think a good, honest look at yourself and the organizations that you are a part of will help to mitigate the harm of the next wave that is and may come through. As a forensic consultant, I have you know, if you want to call it, the privilege of looking at all the ugly stuff all the time, the failures that happen. And one of the sort of fundamental truths that I've come to learn through all of this is that when failures happen, when crises happen, they are opportunities to figure out what needs to change in order to get better, right? In the good times, when everyone's humming along, there's very little appetite to get serious about the things that need to change from the money you need to spend, the programs you need to develop, the procedures you need to update, because things seem to be working okay. But when they aren't working okay and all the cards are down and you know you're in a bind, it becomes very clear what needs to change. Sometimes people need to change, sometimes checklists need to change, but use this opportunity. If you have experienced a failure of your organization throughout this experience in the pandemic, don't be afraid to look directly at it, because it's there where the wisdom lies that will help you fix the problem. And you can't have it without the other. You can't have the benefit without having the honest look at why things happen. You have to go fully transparent with yourself and be honest about the lackings going into this pandemic to figure out what needs to be changed. So head out of the sand is the ultimate source of information there. So to summarize, I think these 3 takeaway points, if you've taken nothing else from what I've spoken about, are sort of the high level items that I think are important. The first is that our experience through all of this and what we're able to learn through our experience through all of this is very much going to outpace the science that can help explain what's going on. We can't sit here and wait for researchers, in different, management consulting firms or other places to come to us and say, research says that, of 30 organizations that experience, pandemic shutdowns, blah, 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 here's how the world is, going to be better if we only take these 3 things away. Science is not able to keep up with the pace of what we're able to see with our own eyes right now. So use it and rely on it. Your experience is your guide for what you should be doing, what worked and what didn't. So to the next point is you need to look inward as well as outward, reflect and understand what you did or did not do, and also use your outreach and your networks to understand what others did and did not do. And it's organizations like ORIMS, where folks come from all different types of organizations, businesses, regions, and so forth, that you each have something unique to add to the conversation about what worked and what didn't. And don't feel afraid to share the positives with the negatives, because everyone else will be able to benefit from perhaps something that didn't work out so well in your area. And finally, don't forget that there are people still that are at the center of your risk management strategies that you rely upon to be their best to perform for you, and to recognize that, it might not be their fault that they're not able to bring all of themselves to your problem on any given day. And so it takes a rethinking about what matters and what priorities are set, and where people sit in the hierarchy of what needs to be done should there be another event that takes place that requires people to act. Are they your risk? Is that something that needs to be mitigated? Those are questions that only you can answer. And I suggest that you do take a look and you do attempt to answer these, because you need to do these things before those last fibers of rationality have run out. Thank you very much for your time. And I believe Dr. Bartlett and I are going to be taking some questions from Tina. So thank you everybody for your attention.
Thank you, Dr. Bartlett and Dr. Campbell. You've certainly provided us much food for thought and provided a few signposts and check-ins that we can all use on this journey. Before we move into the question and answer portion, let me leave you with a quote from Maya Angelou. "I can be changed by what happens to me, but I refuse to be reduced by it." We'll move into the question and answer period now. Okay, so I've got a couple questions, and I will be transparent and let you know that it is only Adam who's here in the live Q&A. Dr. Bartlett had a pressing engagement. So Adam, you're on the hot seat, buddy.
Feels warm already.
This question's pretty involved. How do you coax, encourage, or engage employees to want to work in COVID? We're returning to the office and the fear is palatable with some folks. We've increased mental health benefit coverage to include 26 counseling sessions. We participate in masking, distancing, sanitizing, but how do you encourage those that are still fearful and resistant? And the part 2 of that is, on the flip side, how do you manage the non-believers, the conspiracy theorists, that it's all a hoax?
Way to kick it off with a light topic. Yeah.
A nice light question for you.
Right. Yeah. So, you know, certainly for folks who have a real and in their mind justified reason to be fearful during this time, you know, I think, like I said in the presentation, I think transparency goes a long way to building trust, trust that the organization is doing everything it has the authority to create a safe place to be, and whether that means safe from a, you know, from a illness standpoint, from a wellness standpoint, from a mental standpoint, and from that, you know, I don't think, you know, there's only so much an organization can do. There's only so far an organization can go for financial and other reasons. And at that point, there needs to be a coming together. There needs to be a trust built between company and individual to say, you know, are we at a place together that we are able to work and function together here? So conversations and transparency are going to be very important around that. You know, every situation is going to be unique. Every individual is going to come to bat with a very different set of circumstances. And so I don't think it would be wise to expect that, you know, sort of a common denominator solution will help everybody. You know, accommodations, I think, are going to be the catchphrase of the year and onward. You know, what are organizations willing to do? What are they obligated to do legally? And who's going to go that extra mile for their people? And I think it's going to be an important, you know, from a business standpoint, it's going to be an important differentiator across organizations. Who is willing to do more than the minimum for their people? The employee base is going to know that. They're going to know within an ecosystem of insurance, for example, who's doing what and who's not. Who are the employers that have done more than your average employer? And is there a job opening there for me? Right. So I think, like I said, doing what you need to do now, this comes exactly back to your example about your Taekwondo friend or your karate friend. You know, what you're willing to do now is going to define your future, is going to define what people think and what they believe of what you're willing to do for them. And that trust is something that takes time to develop. So if you're on that path, you want to be on that path, I suggest starting to be on that path as soon as you can. So I hope that answers in some respect the first question. The second one about the non-believers, and I'm going into this knowing that this is obviously a very highly contentious point. I don't mean to make light of it at all. And I think, you know, the way to perhaps frame like in your mind when you believe you're dealing with somebody who is perhaps not thinking in the way of the majority in any given situation is to put yourself in their shoes and imagine the world in their eyes. Like, what are they seeing around them? If you, in this example, if you want to call it a non-believer, someone looking around the world and saying, wow, like, look at what's happening. I do not agree with what my society is doing, what my government is saying I need to do, what my company is saying I need to do or can't do. And imagine what you would do when confronted with what we perceived as limitations, things that you want to do and now cannot because of things that you do not believe in. And now imagine that person is creating a challenge for you corporately. You want, like, they don't want to work in the world that you're creating for everyone else and accommodating everyone else. They don't agree with what you're doing. But imagine that person is a critical person on your team. You need them to be successful in what they do. They need to be in a situation to perform, and you're actively creating an environment and supporting an environment that does not. It does the opposite. You're actually working against each other. So I'm not going to sit here and create an instruction manual for you about how to deal with that person. I think the best way forward is to try to empathize with them. There's a theme across these talks here, to try and imagine the world through their eyes and the challenges they are confronting because of what is being constructed around them in this pandemic. And is there a way to meet amicably somewhere where even through disagreement, that there is a trust built around the value your company brings to the world? That can you agree on that at least, and try to find ways to move that mission forward, even though there might be disagreements somewhere else?
Okay. So the next two questions, I can kind of combine them. So one question is about how we create a healthier work routine for ourselves in our home environment, and is there anything employers can do to help with that? But the other piece is there's a lot of COVID fatigue happening. How do we do some communication to implement change for those that are tired, when you yourself are already tired? So.
Well, unfortunately, we can't go to Hawaii 6 months ago. That ship has sailed. So, yeah, you know, health at home. This is a new thing for everybody, right? Like this, you know, I think, and I hate to just try to hammer these points home, but I think it's still relevant. You have to be honest with yourself about what's working and what's not. Even at the most personal level at home, when you're sitting at your kitchen table doing work or hiding in your 4-year-old's bedroom doing a webinar, is this working, right? Can I do this again? And am I gonna enjoy doing this again? And if I have to keep doing it, is this gonna break me down or build me up? You need to be very clear with yourself what works and what doesn't. And when things don't work, when they are not sustainable, the sooner you can recognize those patterns developing, the sooner you're gonna be on a path to something else that will work for you. That next choice might not be effective, but it's something that you need to recognize, to change, and to keep trying to change if it's still not working. That's sort of the like high level sort of thought process around it. You need to get honest and get real with yourself about what you can sustain, because I can speak personally that when I first was, you know, when we first all went home earlier, second week of March, it kind of just felt like the worst all-inclusive vacation, right? Like you're at home working, but you don't have to really be anywhere. You can do what you want, but the work still needs to get done. And I felt that it was sort of a temporary thing. This is going to go on for a week or two. And so you can kind of burn the candle on both ends for a while, stay up late, get some work done, get up early to get started again. And, you know, without thinking about how long I could run that program for, eventually I bonked in a way. I hit a wall and I was like, I can't keep working like this with an indefinite timeline. Like I need to make a change that allows me to be the best version of myself at home for my kids and my family, and my employers and the people that are responsible to me. So a change needed to happen. And you know, that to me meant focusing more on my own well-being and that of my wife, who also, you know, was in a working from home situation with kids crawling all over us doing this type of thing. So that needed to be something that we took a hard look at and tried to figure out how we can manage ourselves. Again, my problem and solution isn't going to be the same for anyone else, but I think an honest look inward is what's important, being willing to be honest with yourself about what's not and trying to make a change. You know, for the COVID fatigue stuff, when you are, you know, you're done, you know, at home, you're done. You know, there's just the motivation to work is hard to come by these days. You know, I am not here as a physician to develop strategies for people, what's going to help. I think though, the best thing that you can do is to recognize that in your situation, that you are not alone. There are countless individuals that are probably even very close to you, if not slightly distant in your workplace or in your community, that are feeling exactly as you are. Feeling alone in the problem is oftentimes the thing that makes it worse than knowing that there's a network of people that are all going through something similar, that also have something to add of value to say, oh, how can we all kind of get through this together? Having a conversation around the struggle is sort of the first step towards trying to find a way out of it. So, you know, it is a challenge. Use the resources that are available to you through your employers, through your communities, through your own families. But I think, you know, again, making sure and realizing and understanding that you aren't alone is something that I think is maybe helpful in getting you over that first, most immediate hurdle.
Thank you, Adam. I know at where I work, York Region, they're doing live webinar chats. We've got the CAO talking to us on a monthly basis. They're doing lots of mail outs and newsletters and really trying to stay in touch. And they've even started, because as Lynn Oldfield mentioned, it's Wellness Month. So it's Wellness Month for us as well at York Region. And they've put together some resiliency programming at various levels of management and employees. And they're encouraging people to take those courses to get some tips and tricks on how to work from home and how to stay connected. So I think it's really important that employers do that. So I'm going to turn this over now. Thank you very much, Adam, and virtually thank you to Dr. Bartlett. I think this was a really important session. I think a lot of people connected with it and needed to hear that. And I encourage people to stay connected and talk and use chats as much as you can, and municipal forums and Yahoo groups and whatever else you've got going on that you can stay in touch. I'm going to turn this over now to Tanya and Debbie for a few wrap-up comments, and thank you all for joining us. It was 3 hours, I think, that was well spent, and we had some fantastic speakers.
Thank you, everybody.
Thank you so much. Some excellent information there. Dr. Adam Campbell, Tina, all your sessions, all the speakers, we really appreciate it. I'm going to now turn this over to Debbie for some closing remarks. Thank you so much, guys.
Thank you everyone for joining us here today and taking the time out of your busy schedule to share 3 hours with us and get some really good information to go forward with your day. We had promised something at the top of the sessions with regards to a little peek into our 1 year from now, fingers crossed, to be in Ottawa. So if you could go ahead with that video, Dan, that would be great.
If you've never been to Ottawa, you may think we're all about this.
Blah, 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 blah.
Or this. True, we are home of the Canadian government, but the City of Ottawa has so much more to offer. National sites and historic landmarks, cultural attractions, unique urban experiences, recreation and adventure in the great outdoors. Ottawa is home to the 2016 Grey Cup champion Red Blacks, as well as the 1923 Stanley Cup champs, the Ottawa Senators.
Oh, that was real hockey back in those days.
Risk managers and industry leaders will have ample opportunity for networking and relaxation in Ottawa's surprisingly compact and walkable downtown. The recently renovated Shaw Centre, a spectacular convention facility that recently received a top 3 ranking by the International Association of Congress Centers, will be at the heart of it all, within easy walking distance of major hotels, attractions, restaurants, and shopping, and only a 20-minute ride from the Ottawa International Airport. Why not stay a few extra days and enjoy everything Canada's capital has to offer? The conference program promises to be informative, dynamic, and current, providing thought-provoking insights into how the past, present, and future impact our strategic vision. Join us in Ottawa for Vision 2020.
Fingers crossed, a year from today, it all begins in Ottawa. I'd like to thank you again on behalf of ORIMS, Sedgwick, and the RIMS Canada Conference for joining us. With that said, enjoy the Thanksgiving weekend coming up. Everybody stay safe and have a great day. Bye.